Hamas say they agreed on an outline for a Gaza ceasefire deal with US envoy Witkoff. Hamas says waiting for the final answer on the Gaza ceasefire deal.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
One minute now until we get the market on open imbalance and the US cash equity open. So we're looking now to the market on open imbalance. S&P 500 a sell side of 40 million, Nasdaq 100 a sell side of 76 million, Dow 30 sell side 18 million, Mag 7 sell side 60 million. So according to a delegate, OPEC plus JMMC makes no output policy recommendations.
Sweet. I just got off the hold on here. Just got off the pre-meeting with Vol Wiz for today. Think tighter, guys. I gotta chug some water. I gotta bury my dead my dead puts that I've got on this morning. Keep trying to like catch a roll here with some shit tickets. It's just up, baby. Think tighter, guys. It's weird. We've got some keep seeing like negative NVDA posts. And just take a look at this really quick. I'm gonna have to blow my nose hair in the air. Where's the other? Expectations are low going into NVDA earnings report. Just read that. Why? Like, I just looked at the last
The OPEC plus ministerial meeting has started.
6 May NVDA reports. Only one of the 6 were negative. Here, I'll post this in the Discord for you. This is a copy. Hold on here. Let me read this or post this for you. What the buy side is looking for when Nvidia reports earnings from UBS. And then I got one more here. The last 6 reports in May from NVDA, they've been green after the bell. Only one of the last 6 reports have been. And here's like a before you get too bullish post. Everything I keep reading is priced in. But I think everyone is piled into NVDA. And not only that, what else is weird? We're not weird right now, but We've got well, yeah, the old fake out, the green bar up fake out. This was, I was trying to be funny with this, by the way, not actual. I told everyone in the Discord earlier, don't do anything till like 10:30. Tighter, guys. Post that one. So like retail investors are not in the stock market. And there's be careful of what you're reading about retailers. They're in single stocks, but they're not in indexes and ETFs. They're not in SPOOs. They're not buying the markets, quote unquote. They are writing single issues like Nvidia earnings would be a good example. Here's that gap I want to see closed this morning. Someone was asking in the Discord why wait for the opening or for the bell to open. Said we should do a quick pump up and then fake you out. At least get out here and close this crap out here.
Index for the month of May. Forecast -9 on the prior -13.
Now, in the last night's brief, I said to you, I like the idea of Nvidia up into their ER and then sell it, and then come back for a second Nvidia trade for that June summer trade, or even just a delayed reaction. But I went back and looked at their last 6 earnings. They've only had one bad one. Ted, I gotta stir my coffee. I got off the phone this morning with Vol Wiz, and we were chatting. Well, he's gonna be here today at 3:30 in the afternoon. So we have the Nvidia report at 4:20. So we're gonna wait for the options market to close, of course, and then we'll do a special report for members only. And we'll turn the show off. We'll do a special report at 3:30 for members only. And he made a good point to me this morning. He said, you want to wait for the report to find out where everyone is afterwards. He said the last time said we popped up during the day and then blasted down all day long. And the whole market went down with the ship. And my commentary to Vol Wiz this morning was about the drop, the 6%, 6.5% drop in Apple on a tweet, and how you're always, or I think, and my feeling in this market, first off, we were talking about, you don't want to know what we were talking about. I was like, if you're down on a Friday, or we were like, if you're down on a Friday, you just go long with call spreads. You don't want to get eaten alive by theta, but you just go long. Whenever any Friday you're down, pretty much just go long. We think that's comical. But then the other commentary that we had was the market is up. I think it's like 4 or 5% since Friday close. We kind of know that there's going to be like end of month Van and Charm type stuff, and then of course dealers can capitalize on the 3-day weekend. Think tighter. It's like a no-brainer. But we're like, my conversation with Vol was this morning, with Scott this morning, was everyone's on the train, or the market's on the train for the summer trade. And in last night's brief, I posted a chart for you guys. Let me show it to you. We were looking at this chart together last week. And post this real quick for you guys to take a peek at. For everyone to take a peek at. bigger screen. So just looking at this chart right here. This is, if you've heard the terminology, if you've heard this around the internet at all, this is this. Well, how do you say it? You think about an expected. We come into February knowing that we're going to get some kind of a major correction. What are we doing here? We're not rotating charts. Coming into February, we're expecting a major correction. And what we find out is that Trump wants to speed run policy, where we expected some of that policy in the beginning of his, like the first 100-day kind of a thing. You try to get as much passed as you possibly can, but doesn't include your entire policy, right? We expect the meat of everything is second half of his term. And what we end up getting is the full brunt, shit against the wall trade.
Composite index forecast -9 on the prior -13.
Hammered out almost immediately, right? And if you're looking down here, we have recovered almost all of it. Almost the entire trade is recovered. And let me see. I don't know if you can see this here, but can I draw on this chart here? I wish I could, but I can't. Anyways, follow my cursor down here. There's an implication, not only an implication, but a conversation. GS. I'll show you some stuff from GS. They're like, this is all good. We're all good here. Don't worry. Now, Wall Street calls this the most hated rally in stock market history. Trade. Some of the guys over on like GS and JPM are saying retailers have access to more information than ever before. Retailers know more than they've ever known before. They know the conditions of the economy, the business cycle, economic cycle, stock market, you name it. And just looking at these prior years, up here we've got selected 2020, 2021, 23, 24, and 25. And when you're looking back on 2020, think about the Fed stepping in with QE. Everybody's kumbaya. The whole world is kumbaya at a certain point over here. We've got corporate debt bonds and favorable Fed through 2021. Non-adversarial Fed telling you, we literally out of Jerome's own mouth, we will tell you before we begin to tighten. 23 recovery from a correction in 2022. In my view, I called it the buying time correction. They just spread a correction out to not do a ton of damage to the stock market nor the economy. But we were hands were held during that time period. So rather than blasting straight down, we slowly demolished in 2022. And then we get the all clear sign that we're not going to go into recession trade in 23 and 24. But now we're in 2025. And as a retailer, you can see what we're facing. We're facing lots of volatility, unknown unknowns.
100 arrays opening gains.
As far as we know, we're in a trade war with China, and we're still facing, bunch of tariffs for EU, bunch of tariffs for China, bunch of tariffs for the entire country. We also have Besant and Trump making two important statements. Don't expect any negative news for the next 2 to 3 weeks. That puts us into at least late June. And then you also have commentary that thereafter start to expect some bad news from us. We're going to send, we can't negotiate with 150 countries. We're just going to tell a bunch of these countries for you to do business with us. This is what the trade deal must be.
Fed composite index.
And just looking at all of that, the idea here, and yesterday I read a story from GS saying tariffs aren't bad for the economy, which they are normally a one-time hit to the economy or inflation. But you still want to monitor, and the amount of tariffs matter too.
-9.
You can take a one-time hit to, or you can only take so many one-time hits to the economy and the cost of goods,
-9 as expected.
to where it's absurdist. And the U.S. can't make every good, nor can other countries make and provide goods that quickly. They can, but the stickiness of the cost of goods can be a little more persistent than you think. So you could start to see some kind of hit to the economy. Not only that, but
According to the FDIC, US bank profits climbed 5.8% in Q1 2025 to $70.6 billion. They say bank profits growth is driven by higher non-interest income.
you can lock up how money flows within the economy with yields, and also investment into the bond market from foreign nations. We know that the Fed's already stepped in to provide some liquidity, but also it can happen without yields, just uncertainty by companies.
FDIC.
I take phone calls from people all the. I had a phone call last week from a guy
Real estate portfolios.
Voice
who
news.
is. I took a call last week from a guy who's in trucking, and truckers are charging through the nose. Took another call last week from a buddy who's saying can't get equipment. I took another call from another buddy saying that there's no spend, business to business guy, and he was saying there's no money being spent right now. So you can like lock up money, freeze money flow within an economy with just uncertainty. And though everyone seemingly is fine right now, and the hard data for the consumer is still pretty good, how many more hits can they take? So just looking at this chart right here, the question becomes, are we in for this up summer trade? You guys see the summer trade? Here, let me bring this up a little bit for you. So this is May, and I want you to look at June and July, right here where my cursor is. And you've got this huge move up, right? Historically, this massive move up in usually starts here. It can theoretically start in mid-February, but it gets really going April 30th. So right in here, see right here? Or sometimes it starts like last day of February, but by April 30th, right in here, it normally begins. But if you wanted like, hey, it doesn't start in late February or mid-February, late February, by April 30th, you're ready to rock. And there's more time here. There's 2 full months typically. Now, Pravorsky, he says June 20th. And I think that aligns more with what Bessent has said and what Trump has said in terms of expect some shocks, or expect, Trump to get back on the phone screaming and yelling at 7 a.m. or whatever. But even so, you've got what's considered the stock market's worst or most hated stock market rally, and everybody's jumping on board. Like everybody's on board here. Everybody but retailers, I guess. Now I think retailers are on board for single issues right now, but they have to, or they're being told, hey, come join us. Now, there is some data as of yesterday saying retail is getting on board. The data was retailers aren't buying, and then it's starting to flip to, oh, they're starting to buy, and don't worry about anything, and everything's going to be great and honky-dory. And we're going to get this summer trade going because we're locked into it. Wall Street's locked into it, and they need everybody on board for bag holders, of course, right? They want everybody joining in for this trip higher. And I also want to show you something else here, just so you can see. We usually like trade up into July. I mean, there's like a peak here in early July, usually. And then we trade sideways. And then we roll down into the end of July into usually mid-September. Sometimes we get like September, October, November. But generally, in this year in particular, you're then looking for a super ramp into the end of the year. Now, saying that, if we follow this track right here, do you know where that puts us into end of year? It's not 620. We're not asking to trade 620. We're asking to trade way, way, way higher than 620. Way higher. And if we follow this expectation, and we have nothing to worry about, no too many tariffs. Our tariffs we're talking about throwing on the world are the same rate or higher than the Great Depression. Now, historically, when we did that during the Great Depression, or when Hoover did this during the Great Depression, it didn't cause the Great Depression. It didn't help the Great Depression, though. Great Depression was going to happen regardless. Hoover amplified the Great Depression with his tariff program. So it's not a direct correlation or, hey, we're going to go into a depression. But it does beg the question of, do we get this, do we stay with this summer, or is there some kind of a major roll in here? Is it earlier? Is it like late June? And what is this dip in late June or start of this dip in late June, late July? Is it deeper than we expect? And then we maybe just climb back up to hit 620, 640. And what are we trading today on high? 59.40. We're like, we can almost touch all-time highs as of today. So I think that's the conundrum, if there was one, in the face of all of this uncertainty, shortages, huge tariffs, degradation of the consumer. Consumer's still good, but they're not that good. They were really good past. They've recovered so well that they were better off last 2 years. Actually, have been better off since 2019. Housing market, not quite, doesn't quite matter yet, but we're almost there with degradation. Let me show you something cool here. A couple things to show you guys this morning. There goes that roll. Go down there and close all that crap down here. Let me show you something else kind of neat here. Now, the housing market's a weird thing. Housing market is very dependent upon region. It's like micro markets, for lack of a better terminology. And the housing market doesn't matter until it does. And I want to show you something kind of cool here. This is a pretty decent way to view the hard data on the consumer. And there's a lot of misnomers out there right now. You'll hear people say things like, well, it's a bunch of suckers bought at real estate highs. Hold on here. Can I mute this? Yeah, mute all that. Bunch of suckers bought during real estate highs, but that's not true. We're gonna look at the crayons here. Here's Austin. On the surface, this is Austin, the city of Austin, right? On the surface, you would think that everyone's doomed in this housing bubble. But this housing bubble really got started right around 2019, 2020. What's fascinating, though, is that most homeowners have owned their home before this bubble. They own it over here. There was a tightening of housing supply during COVID. Nobody was moving out of their houses. So you have this bubble here, but most homeowners owned over here. So if you've got majority of home ownership was prior. Most homeowners buying homes. Nope, hold on. Here's 2008, 2009, right? There's like 2011, 2012. So you get homeowners buy. And then shut down. So homeowners see their market crank, and it's now coming down. We could literally be right around here, right around like 500,000, 450, 475, and the majority of homeowners are still up. The majority in Austin. So, and this is very similar to where the consumer is. The consumer could see in Austin prices come down all the way down here, and even then they're not. Even then they're in line. They're not even sweating. I mean, you're gonna have a few people up here that are gonna be upset and mad, but even these people that bought here can say, hey, you know what? I'm just going to stay, and maybe I'll raise my kids in Austin. Maybe I'll stay in my house long enough where this recovers. You know, I stay in my house for another 10 years or whatever, and you still have the stability of all of these buyers in the market. So the housing market's fine, believe it or not, even with this housing bubble. The same thing shows across the country. You can see it here. A majority of home buyers were buyers over here. These home buyers could see in Oakland. This is Oakland. You could literally see this stuff come down, and these home buyers, this is 2019. A little bit more pain here in Austin, but still not all the buyers. All the buyers were buyers down here. They're still pretty well off, aren't they? The majority. So this housing bubble 2.0 is in no way the same housing bubble as 2006. And you got 2000. Like, I mean, look at this here, like 2003. These guys got annihilated in here. This is a completely different housing bubble. So the state of the consumer is not the same, even though, let's bring that up here. Even though you'll hear this like chatter. You hear this chatter like, oh, people are screwed, bro. People that bought during COVID, bro, are screwed. they look at like one piece of information, but not all of it. So the consumer is still okay, but we start getting some. And truthfully, one hot inflation print does not make a trend. Let me show you. Let me show you that really quick. What am I looking at here? Why is that up? Looking at my tickets really quick here. Hold on. I don't know why that's up. Maybe I could tell now why my Let me show you another example here. Let me show you the difference between knee-jerk reactions versus reality. It's a good way for a lot of you to understand reports, data reports, and stuff like that. This is the most recent. This is the, sorry to do this to you guys again here. Moving your comments down, getting rid of my camera again, webcam frame. This is a very easy to understand data chart. So this chart right here is a great way to understand. This is durable. I said GDP, but I mean durable goods. Excuse me. Now, what's fascinating about this chart here? This is a durable goods orders data, and the blue squiggly is the month-to-month durable goods reports. The red squiggly is the 3-month average, which actually forms your year-over-year trend. But notice how the blue squigglies are, up and down and up and down and up and down and up and down. And even the most recent one looked like shit. You see this most recent one looks like crap right over here on the right. Yet over 3 months, it smooths itself out and is still on its way higher, even though we have this big spike down. So you can get these knee-jerk reactions or a month or two of bad data, and yet all is good overall. So that's how you get the sizzle in reporting in the stock market. You'll get people on FinTwit or a newspaper or a shit rag or CNBC or Bloomberg, and they'll sell you a bunch of doom that isn't real. You could literally overlay any data point with month to month, overlay it with a 3-month, and if you've got the year over year, you could overlay all three in different colors. And notice that a month report doesn't make it so in the grand scheme of things. Excuse me, of things. Doesn't make it exactly the truth. So you need like 3 months of data, if not 6 months of data, to make a real true trend. And the consumer is pretty well off right now. But you can experience shocks or high inflation prints or shortages or a tweet or whatever. It doesn't necessarily make everything bad and awful. And I think that's part of the arguments going on right now. Let me read you a story here in the background. We watch this here. Watch this settle in here. I mean, all the heavy hitters here coming out too about this stuff. Like, let me read this story to you. Goldman kills the right tail. This is a story to tell you to get long for summer. GS is basically saying, we're long, you need to get long with us. No longer expects sustained tariff inflation. This is by BBG. Even if one ignores the bigger picture debate about whether tariffs spark inflation or deflation, we have long said that, contrary to conventional wisdom, tariffs result in demand destruction. I agree with that. Unless accompanied by a massive fiscal stimulus, as was the case in 2020, which is ultimately disinflationary or alt-right deflationary, as increasingly more economists now admit, including St. Louis Fed's own researcher, Javier Bianchi. So when you hear the Fed chair, Jerome, say, we don't know what policy, we got a Fed meeting, or I got a FOMC minutes today, but you got Fed speak from Jerome. He'll say things like, or recently he'll say things like, we have policy uncertainty. We need to know more from the White House. And that is number one, to find out what firm policy is for the initial hit, negative hit to the economy. And then are these tariffs able to be passed on to the consumer? Now, for the first time in history, tariffs, or not tariffs, but inflation was able to be passed on to the consumer. But that was more because you had the ability to absorb it. Americans tend to be lazy. Can't believe I'm saying that. If you have more money than you're supposed to, you just feel richer. Like, yeah, I can afford that extra, I don't know, 10 or 20 bucks on a McDonald's meal. I'm rich. I'm rich, bitch. But I'm going to go on the internet and complain about it. I'm not happy about it. I'm going to complain about it, but I'm going to spend that money. And that's real. If you go out right now, anywhere, people are out. People are spending. And people still complain. They complained all the way up through this last election. Nobody likes inflation. They don't care if they're well off or bad off. The consumer doesn't care. Now, there is a moment where the consumer cannot handle that inflation. And when they can't, that's when like tariff inflation does no longer become sticky, or as Fed Chair Jerome says, persistent. And that's when you revolt and say, you know what, I don't have the money to spend on this crap. I'm just not going to do it anymore. And that's when corporations begin all their bag of tricks, bags that have less chips in them. Reformulating a value meal to trick you. Go bankrupt. There are a lot of companies that say they dig their heels in. You're going to spend this much until another company replaces them. Kmart, Sears, Walmart, HQ, if you even remember that hardware store, and Home Depot. So you'll get flipping of new companies. Matter of fact, I was looking at a restaurant yesterday in California that likely can replace Chipotle Grill. I forget it's called Braca or Gabaka Bodco or something. I don't know what they're called, but they give a huge burrito. They just like load it up, and they've got like 30 people working the burrito maker table or whatever. There'll always be a replacement company. As companies mature over time. So he's making this, GS making this argument, hey, everything's going to be fine. None of this is going to be persistent. Market's going to be fine. I don't know that that's true down the road. I don't think that it is. I think that it does hurt eventually. You only have so much you can take from the consumer where you erode them. And we do enter into a recessionary type environment. We also have spending bills and deficits. Big, beautiful spending bill. We've got debts, ceilings, all that stuff to contend with. As we move forward this year and into next, we've got trade war that's likely going to grow with China. And we have a slow degradation of the consumer. But is it today? Likely not. Is it something that takes a year or two? Likely yes. But looking forward into this summer trade in particular, there's an attempt from Wall Street to make you think there's not going to be any problems this year. There will be. You are going to get the headline tweet risk. More than likely not for 2 or 3 weeks. I wouldn't expect it. Maybe here and there we get a little bit, but I don't think you're going to get the full court press from the White House until at least late June. But be careful as you are told this stuff, because you're basically being told, don't worry about it. And I don't know that you can't not worry about it, or at least the headline risk or the shocks as we make our way up that road. I would expect those shocks to hit either like late June, mid-July, and you'll once again be told to consume the doom and that the economy is going to burn down and that the consumer is screwed. And then we'll come back into September and all of a sudden they're going to refeed this to you and say that the consumer is okay. That's why I always say it's important to know exactly where the economy really is in truth, and also know that the stock market can be punitive, like it was this past spring. We expected a major correction, but the market was very punitive in it, weren't they? We went 20%. Like 15 should have been about it. We went another 5, didn't we? So that punitiveness, does that continue on this summer? Does it maybe come in a little bit early? And volatility, we are in volatility this year. I would expect volatility to persist this year. Or otherwise, you'd see VIX 9 days not trading $8. Right? The low here was 14. Not 8. Not 9. Even the vol index is telling you you're not getting $8, $9, bro. Volatility is real, and it still persists in the background. So if you're like expecting that like 8, 9% volatility, either everybody has to join on board and be brainwashed into believing it, or we will still experience it this year along the way. So even though we go up into we have our expectation of going up for the next month or two, even next 3 weeks, great way to capture a great upside trade. You should still be be on point with, hey, we can wake up any day of the week, be down 2, 3, 4, 5%, and look for that entry to get long in those moments. If you see us drop over the course of 2 or 3 days, you get a nice long in there, nice spread, go up with it. You don't necessarily have to own the stock market or have a bunch of risk on, or like own Apple stock and see it blast down for 6% in one day. You don't want to be that guy. You don't get caught in that. It doesn't feel good. I got caught on the end of the major correction. I got caught in it buying SPY, accumulating SPY. And then I had to sit there for like 3 or 4 weeks as the worst of the worst doomer shit came out in the market, and I'm like, oh god, just get me out of here. Like, I just want out right now. So if you want to participate this year, you can, but just wait. We know that this shit drops like every 2 or 3 weeks. Some kind of diarrhea just drops in the market. We blast down, and it's an easy way 2 times this year to get long. The first one is right now, like starts April 30th, lasts until at least late June, maybe even the first couple week or 2 of July. And you can also look for a high in July to get a put spread on, right? For all that doom into, we're almost done over here closing this stuff up here. Almost done here, guys. So what's the takeaway from all this that I'm telling you? One, don't believe anyone that says that this stuff is not going to hurt the consumer. We can see the consumer being hurt right now. 2, I was told earlier this year that we were in a bear market. We are not. Price remained, even though we sliced into it, price remained above the monthly trigger. If S&P 500 stays above the monthly trigger, we are not in a recession. As a matter of fact, I'll show you a recession. If you want to see, I've got a couple different ways to show you if we're in a recession. Like some of you think we're in a recession. There's a couple of different ways to look at it. The white paper from Larry Williams has a great recession indicator on it. I'll show you another one here. Usually the easiest way to find out if we're in a recession is unemployment. If there's like one data point. Think tighter, guys. Bring that down to 100%. Show you guys right now if we're in a recession or not. Can look this up on the Fed if you like, or on the Fed if you like. The Department of Labor. This is people receiving unemployment benefits after week 1. The purple is when we enter recession. You can see in 2025, we're below 2.0. We need to be right around this 2.5. Not even near it. Not even close to it right now. So we're not in a recession. No way, no shape, no how are we in a recession right now. We're not underneath the monthly trigger. The consumer is still kind of well off, but they are degrading. So it could take some time. Now, but the key point here is that your Fed, hey, we're doom and gloom. Everything's on fire. Everybody's hair on fire. Sell market. And now you're being told everything's going to be fine. In reality, I don't know. I wouldn't say everything is fine, but I would still expect things to degrade over time. And I would keep in mind the idea of why you're being told this stuff, why you're being fed everything's gonna be fine, don't worry about it, just market goes straight up. I would keep in mind these two key points. The consumer should degrade over time. It's not going to happen today. It's gonna take more. It's gonna take like 6-9 months, a year for that to happen on a larger scale. But in the short term, you should expect the market to recover with shocks, with volatility, with uncertainty through this year. So when those opportunities present themselves, if you're in seasonal support, which we are right now, if you get a shock, you get long. If we're heading into seasonal weakness and we rip higher, you're looking for that to take, a put spread, for lack of a better word. And also you can capture volatility in both of these environments. And that's what this conversation is going to be about later today at 3:30. When volatility is low in a volatile environment, you can usually capture that volatility on a low. And the low right now is roughly $14, right? We got a target here, $14. Maybe we can get volatility low at 14 or 12 for summer. As we start to make this run up into midsummer, you can usually put on a trade that would capture volatility, low volatility, knowing we're in a volatile environment, right? Volatility begins to rise as we make new highs in the market. And then if the market rolls over, that volatility should spike, right? So volatility ramps up to, let's say, 60 or 70 or something insane like that. Puts become much more valuable, don't they? You're talking like 10, 12, 14 times your initial bet. So your puts become valuable, buku, like a lot. So if you're looking for that 10 times trade or 12 times trade, 13, 15 times trade, in a season of volatility, that's how you make it in this market. So we're going to be looking for that later today. We're going to talk about it around 3:30 this afternoon. And during the Nvidia earnings as well, and look for opportunities into this summer to capture both the move higher, right? So you can have this like bull outlook, like, hey, I got some call spreads, or I got some calls that are 6 months out or 9 months out, and I'm going to also try to capture volatility in the form of puts that will pay later. They're dirt cheap, right? And they become valuable for you to sell to a sucker at the highs of volatility. So you have volatility at, let's say, VIX 9 days at $12 or something, ramps up to $60, and you hand it off to a sucker. And you're price agnostic in that volatility. You should still expect that. Don't be expecting Trump to change or White House to change, or you shouldn't be expecting like kumbaya with China or anyone else in the world. We're making this change permanent. This is like, I want to call it controlled demolition. And maybe the White House is, and other participants are capitalized or are blatantly manipulating along the way. And you don't want to get caught in that either. So no drinking the bull Kool-Aid in this stuff either. You get what I'm saying? They're pretty blatant about it these days. Have you noticed that? Like, just come right out and they'll, amplify or emphasize market manipulation, right? They're not even like hiding it anymore. It's just public. SPOO's dipping its toes below 589 right now. How low do we go? It's a Friday, boys and girls. Not a lot down there. Do we blood straight into the bell? Do I get paid today? Almost closing the gap from pre-market now. The bigger question is, do we trade sideways and sell the close, or to recover and actually start trading all-time highs by 4 p.m.? That's a joke, too, by the way. Remember my conversation with you yesterday. Said to you, if we come down into a place that you like, hourly trigger, daily trigger, if you're looking to put on an easy street trade, we'll start looking at them now. We're getting close. Start taking a peek here. Some easy trades. Well, it looks so bad right now on SPOOs. Really isn't that bad, is it? Price is not seen since yesterday close. Weekly trigger is caught back up with us. New tab, new tab. What do we got here? What is this? Is simple, a call spread. Could even do a ratio bull spread here. Capture however high we go. It's a good SPY. Trading 590. Call spread is purchasing a call with a lower strike than the written call. So we'd be at 590 right now. We'd look for a June 20th. We'll get aggressive with it. June 20th. And we'd be looking for we got 612 or June 20th June 20th, a 590. Buy a 590. Just see what the payoff in this is. 590 right here. We buy that call. $9.97. And then let's keep it simple. Let's look at 612. Right a 612. See what that payout is. Yeah, we got 610 and 615. Let's go 610. Calculate that. Total cost $197. Pays 144%. Cost you $200. If we hit 612, pays 124%. You know what's crazy about this too is if you opened this trade individually, and we had 1 day of down along the way, you could cut. If you had a margin account, you could cut the written call and just ride up the other call. This pays 129%. To trade at 610, it trades 100%. I mean, the average stock market return is 20% in a year. If you had a return this year from a trade, even today, you've missed all of April or all of May, or if you wait to execute this trade until after Nvidia earnings, you have a herd mentality in Nvidia. They all scatter. Maybe the market's a little bit weak for a day or two, right? First day or two of June. Everyone takes their money and run. You did this twice this year. You did it right now. Maybe not at this moment, but next week or this week. We have a downside move on an hourly trigger or daily trigger. You took 2 trades this year. 2. Did one in mid-September. You'd have a return over the year of 200%. 200. How many traders do you know that have those returns in a year? Like end of year. You stay here and you're day trading puts and calls with me, 0 dates. And you wonder, like, how does Cap trade degen trades? Something like this. Your balls deep, close the laptop, don't look at it. You go to work every day, you save your money every week. Slam down your 20 grand, 50 grand. You make that, what, into 100 grand? 50 grand goes 100 grand. You do it a second time. That's 200 grand. 1 year. 2 trades. Coming into Nvidia earnings. Got some volatility. GDP, PCE. So if you're a bull, you're looking for volatility to get in on a trade. You're all telling me you're permabulls. You tell everybody else you're permabulls. 70% of you are bulls. Coming into just today, hourly trigger. Seems like a no-brainer trade. Not too hard. You can even make it better. You just do a ratio, a bull ratio spread. If the market goes down from now into summer, you break even. Probably up like 5% in the trade. But if you're a bull and you like trading like a bull, you like degen trading, 2 of these a year. I don't really believe that you know that many people that are up end of year 200% on the year or near it. This only costs $200, I think, to enter. Oh, the entry cost is $800. Excuse me. Fairly easy. Fairly easy trade. It says total cost $197. This isn't a rocket science trade. You could even place this trade not just separately, like each leg, but you could get one side on a high and one side on a low to maximize it into June. You could date this later out. That's a little aggressive, June 20th. You could look to trade, or you could look to do this for first week of July, second week of July. Try to close it out June 20th. or even if you have to hang on a little bit longer, if you want to do a little bit less risky trade. It's a synthetic long, basically, with a way better payout and defined risk, right? Like you want to rinse and repeat trade or quit your job. It's not that hard. Not only that, the spread on it's going to pay you something. The big question to you is, will we be at 590 in midsummer or not at any point or higher? That's the other part of this trade. As long as you're above 590, or I think it may be slightly higher, but not rocket science. We're not doing like condors and rolling positions and flies and you still have time. If you cash account, you can get a margin account. They're not that hard, are they? Go to like Robinhood. I don't think you can open these. Oh, I guess you could open them separately in Robinhood, but I think you can. But you can get like Tasty. Tasty is great. You can call your broker. I love calling Tasty up. Say, hey, I'm trying to build a call spread. Can I get a better price on this leg and a better price on that leg? They'll give you margin. That's right, Sawyer. Good job. These are easy trades. Like these are no-brainer fucking trades. They're not that hard. And the best part is you get one down bloody day. You get one down bloody 3 days. Market comes back, doesn't it? Your trade's still good. I mean, I don't. You don't have to trade that much. We like to fuck around here in the stream, but these are rocket science trades. These are easy things, and this like is the taste for you to then learn how to what make money, right? And then you can start buying the market. You can start with more complex spreads, right? You can take an assignment at that point. Bro, I'm rolling in 200-300K a year. How many of you out there make more than 200,000 a year? Let's find out. How many people make more than 200,000 a year? Shocker. Only 3.65% of America. It's a lot of people claiming they make that much money out there. There's a lot of people claiming they're making a whole hell of a lot more than they actually do. I fucking love it. 3.65%. There's a lot of there's some splaining to do out there. We got some splaining to do. So I know when I tell you this stuff, it's like in one ear and it's out the other. For the vast majority of you. Vast majority of you. And yet we like gamble every week on money from a job. Not from winnings. Money from a job. So when you're trying to show profit and show that you're a responsible adult and that you are an actual market participant. It's trades like this. This is a simple trade. There's better trades, but you know, like if you're just a degenerate, like a seasonal call spread would seem like the place that you dip your toes in with some time on it and the market's on your side. You know what I mean? Oh, keep on coming down. Keep on coming down, baby. Keep on coming. Vic's perking its ears up right now. Come on down, baby. Come on down. And you only need one or two of these. You get more opportunities for this, but and even more fascinating, you get better returns on the upside than the downside generally. Put spreads tend not to print as well as call spreads, even in a bear market. Timing top sucks. If you're just a market buyer with call spreads, they're called synthetic longs, basically. You could also, if you're rich, you could just buy calls a year or two out that are in the money. Maybe as far out as you can get them. That's another synthetic long. You just own in the money calls that are there. It costs a lot of money to do that, but you get outsized returns. Yeah, that's the other thing. FOMC shouldn't be a big mover today. FOMC minutes shouldn't be a bunch of volatility, or a huge trigger. Typically, the minutes, they used to be a big trigger for the market. They haven't been in recent memory. I'd love to be able to buy today like 585 or lower, or this by Friday. Like 585, 612 call spread if it was me. 580 would be even better, but I think I'm choosing beggar right now. Trading 589. If we can get any lower, it's a gift. What kind of return on my port? What do I make a year? I make anywhere from, depending upon the year. I sometimes I miss returns. I'll make like 350 a year on a good year, 500,000 typically. Or the past since I started streaming, my returns are going down. I do too much day trading with you guys. I used to only do ports. I would fuck around every once in a while, but I stopped trading a lot. Right before I started streaming, I didn't trade as much. I started trading a lot less. I'd put on anywhere from like 9 to 12 trades a year. I stopped degenning. Bear markets, like 6 trades, 4 to 6 trades. I'd give some money back in put spreads usually. Now I make a lot of money, but I do a lot of degening with you guys because we have a live stream. It's like all day long. It's not a recorded video or anything, or like an hour stream. And there's even more responsible ways to do this. Like you can own Ford. Ford tends to follow the S&P 500. Dirt cheap. Buy 100 shares. Like start with like owning shares would be nice. Unrealized loss in companies that you don't think are going to go bankrupt. Ford's not, or it's unlikely they're going to go bankrupt. S&P 500 would be better, but I know that everybody is not rich. You can see it right here. 3.6% of you. That's not a high number of people that can own the SPY. I get that. Or even SPX. Or futures contracts. That's even better. So, if you own SPY, of course, you make enough money, you can start owning the SPY and getting the DivX on it. I know people say like non-serious traders own SPY. That's bullshit too. It's the most liquid traded symbol in the country. There is no more traded symbol than SPY. And you get DivX, which is kind of nice. It's a nice little bonus. Especially if you're not that accurate. It helps. But truly, over the course of a year or two, you go to work every day, save your money. Every week, you put a little bit of money in some kind of interest-bearing account. Webull, I had money in there that was making like 5.3 or 5.5 at one point. I'm assuming Robinhood pays some kind of money. Just put your money in there. You could also ladder short-term bonds or bills. 3 and 6 month bills have been paying excellent. You can ladder those every 3 months. And eventually, a point will matter to you if you accumulate enough money before you roll into a new bill. But you can do it every 3 months. It's almost risk-free. You get almost the same returns as S&P 500 in the course of a year. You can just do that until you make enough to do 1 or 2 of these trades a year. Almost sure thing, even in a bear market. Almost sure thing. Double your money. Along the way, learn how to trade more complex spreads. And you accumulate an account. You can quit your job forever. Forever. If you're like a low-wage worker, it should take you a year or two. If you're a high-wage worker, you should be able to quit and never, ever have to do what you do ever again quickly. And not only that, you could be, if you're a doctor, you could just donate your time in a constructive way, right? You're a doctor, an attorney, or something like that. Shouldn't be that hard. Like the degeneracy of like, I gotta be on this or that, or my favorite stock market this, or my favorite stock market that, my favorite degen this or that. See if we can turn around here. I got some stocks for you guys. Hold on, we'll take a look at the stocks right now. It's a good inflection point to check the stock market and see if everything's running today. Let's take a look here and see. Ooh, dude, Burn is still working? I'm saying that 6 month bills are good right now. They may not be good later in the year. It's a good way to fight inflation is 3 and 6 month bills. But if we get a cut, check out still wants to run right now. So we're going to go over something here as a group. Okay, we're going to talk about something here. So inside the Discord, we're going to start focusing on so there's a Captain Jim James index. I don't know if you know about it. About 5 years ago, I want to say about 5 or 6 years ago, I used to post on Twitter stock picks. And might have been longer than that. Might have been, all right, maybe it was longer. Maybe 7 years ago. Been a long time. Getting fucking old. I used to post stock picks, and there are some people out there. One of them is Joe Donut. They create Captain Jim James Index Fund, and they track these things through the course of a bull market. So we're gonna chat right now. We're gonna piss away some time. You guys know what you're looking for here, right? You don't need me to tell you. So, I have some rules. When we comment, let's talk about accumulation and distribution. Let's talk about stock picks. If you want to be a stock trader, this is gold. Okay, this really is. This will change your life. Let's talk about stock picks, or being a stock trader, or a new market participant. You know nothing about options. You don't know anything about options. You don't know anything about the stock market. I want you to know what a market maker is. There's like dealers, dealer market makers. They'll be like interchangeable. You hear those words interchanged in the market. We want to talk about market makers. There's one program I want you to watch if you can, because they're dumbed down. They're so dumbed down. But there's a really good, if you're a crayon eater like me, it's always better to dumb the market down. It really is. You dumb the market down, simpler you can make it, the easier it is for you. Truthfully, in real truth, the more complicated you make the market, the more you begin to lose, in my view. So if you're a new market participant, you tend to make a lot of money until you complicate things. So young new market participants tend to do well because they don't understand the dangers of the market. If you can go full circle learning the market and then come back into that, hey, I'm going to dumb it all down, market gets very easy. So think about that. And I want you to think about this. There's a fake docu series on Netflix about Bernie Madoff. We're not going to get into historical figures that are market makers. There's a real great history on this stuff, but we'll make it simple. We're going to go on to Netflix and watch the Bernie Madoff story. It's a fascinating story in and of itself. Netflix dumbs it down. Yeah, I don't even know if you need to watch the whole docuseries. Maybe the first 3 episodes. And it lays out for a layman or woman or whatever, they, what a market maker is. And I think it does an okay job of explaining risk that banks used to put on. But if I worked for a bank, a big bank, right, and I became a trader for them, and I grew too big for my britches, and there was no room for me at the top with Jamie Dimon, I began to go out on my own. And I would put dumb down. I would put risk on the market. And I would know Jamie Dimon and say, hey, we think the market's turning, and I think you should start getting long or start getting short. Hedge funds, then individuals, family practices, family offices, things like that. And these are kind of kingmakers. And this kind of market maker is the kind of person that will scrape a stock at the bottom of a company that's normally, they're not going to go bankrupt, and their price is in the gutter. And what they would do, and sometimes even still do, even though they don't admit it, is they'll create a story for a company, and own a bunch of shares. And they'll even go to a guy like Jamie Dimon, maybe not Jamie Dimon today, but they go to a fund or something today. This has all gotten smaller and smaller and smaller over time. But the idea behind a market maker is this. The market is based upon accumulation and distribution. So you're a new market participant, you got a stock, any kind of stock. Keep coming down, baby. Keep on coming down. Failed the new high in the half an hour trigger, now looking lower to 588.78. So you have stocks, right? Shares in a company. And you've got company XYZ. And forget fundamentals or technicals, forget all that stuff. Just think of that stock as accumulation and distribution. It's very simple. Stock price is $1, stock price is $100. And the stock market loves to run a stock up and down. You can look at fundamentals, you can look at whatever you want. As long as that company is not committing fraud or going bankrupt, you'll see the rise and fall of that stock due to all sorts of reasons. Market conditions, business cycles, economic conditions. They made a mistake with a product, you name it. Took out some loans to do a bunch of cocaine. You can assign it to whatever you want. Just know that stocks go up and down. That's it. Simple. And there are guys out there, gals out there that watch these companies. And they look for the rise and fall of that stock. And what are they doing? Are they promising something that's not real yet? A thingamabob that they're looking for money? Give me some money, bro. We're going to build this thing. They have now actually built it. Do they make an actual product? And where is the price? So oftentimes a market maker will accumulate stock in the gutter of a good company. Otherwise, good company. You ever see people who go to bear markets are like, why is my stock burning? They're doing such a great job. Why is it on fire? I looked at the fundamentals and the technicals, and it's still trading for $1. Another thing to note here is that companies come and go. I got a great one for you. DGLY. You'd have to do a deep search these days about that company because the internet is not saving records anymore. But they were a darling of Wall Street decades ago. Maybe a decade ago. They had articles on Wall Street Journal, big full-page spreads in the New York Times. They were going to be everything. And they were a flash in the pan. They still survive, I think, today as a company. But I think they're in like a strip mall. And the original CEO is in there with like 10 guys working. He makes a fair money, lived through the party stage. Stock never came back. Never became Apple or its version of Apple. So note that too, like the length of time a company is listed, they can become stale over time. They might not ever come back. There is a part to this where you've got excitement in a new company. When you think about that too. So stocks rise and they fall. If they're not committing fraud, if they're selling real things, if they've got people excited and they're newish and they're in and out of bull and bear cycles in the market, right? Expansion and contraction in our economy, capitalism. And let's say we're coming into the beginning of what we think is possibly a new bull cycle. Okay, man, we might be bottoming. Everyone's talking about it, bro. You know, SPY just cratered down to the depths of hell, right? The S&P 500. And you start looking for what? Not SPY. Anyone can buy SPY, get an average 20% return. You want to outperform SPY. So you should be looking for what? What's the new hot thing, right? Coming into a new bull cycle. What's the new hot thing? What's everybody talking about? And which of these companies are going to actually produce? We don't know, right? So let's think about this last cycle. What's the hottest thing? AI, robotics. How many of these companies are real? We don't know. Most of them are not. These are new companies, right? Spec growth is what they're called. But not all spec growth falls within the hottest thing either, does it? You just need excitement. You start to think about the rise and falls of companies in the beginning of a bull run. And you have something else to your benefit. When we IPO companies these days, before a public launch, we're doing round after round of pre-selling shares, right? Back in the day, keep on coming down, baby. Keep on coming down. Trade sideways and then blood us into the bell. We're going down, boys, in my view. So, start of a bull cycle. I like spec growth. I would like my spec growth to, if I'm going to get into something that's speculative and they don't actually make something, I can't fall in love with it. If we are at the beginning of a bull cycle and I do spec growth, it'd be better for me to see that company make something tangible, not promise something. I don't care about Tesla promising something. I care about spec growth that excites people. It's in the shitter, likely a new company, beginning of a cycle. They have real money coming in the front door, not from speculative PE or VCs, but money coming in from product that they're making, digging up, building currently. What's even better is if they're new company. And what if their stock price has been going down at the tail end of a bear market, and yet their reports and guidance and outlooks, their fundamentals look great. Hey, look at that. Their guidance was unreal. Oh my God. Stock price just keeps getting annihilated. Oh, and I'm in modern America right now where this stock opened at $50. It ramped up to 100 in 2 weeks. Oh, and then it got sold down to $6, $8, $10. I wonder what round of stock that was. I wonder who bought that stock at $10 before it launched, before it IPO'd. This is what a market maker does. So you try to identify these companies. So what you're looking for is what? You're going to be a stock picker. A stock that has options would be nice. Stock that's in the shitter. Stock that IPO'd recently. Turning into a bull market. They have a series of great ERs, great guidance. They make something tangible. I used to post these stocks on Twitter. And if you were to look through a typical bull cycle, 1.5 years, 3 years, 5 years, the better ones, 7 years. Oftentimes, you're scooping these stocks up, $10. They then become meme. They trade $150, $300, $450. All of a sudden, they're on Wall Street bets. Everybody's like, "Oh, bro, you know about this stock or that stock?" I'm not going to name them. But you've been in since like day one. And what's even better is when you're in a bull market. We're in a bull market, right? Still, we're above the monthly trigger. We're not in a recession. Is that there are new companies that IPO or go through the IPO cycle? You can keep looking for these companies. And they're in accumulation, not distribution. So let's simplify that. Talked about accumulation, distribution. Accumulation. Very simple, right? Goes to high, you start to see it roll. Fake out, right? Fake out again up there. Oh, yeah. Comes back down here. Maybe this was pre-IPO. Then you start to see it bottom. Right? And you see like great ER. Start trading a little bit higher over here, right? A little bit higher. You're like, whoa, put together 3 months, 6 months. It's in the dumpster. Killer ERs, killer guidance, making real shit. Why is it this low? Fundamentals look good. Fairly easy, right? Up, down, up, down. You're going to assume at this point that this company likely has a rabid following. There's people that are like trapped. They know everything about this company. You can always check in with those people. So you're going to check on sentiment on this company. You're not going to become one of them. You're never going to get married to a stock. Never get married to a stock. Never trust the CEO. Never trust anything. Trying to make another turn here to the upside. We also have a bear cross and a 5-minute and half-hour trigger right now. See if we can escape this and squeeze. Try again. It's all coming together for you. So that's what I do. I look for these companies. If I post the stock ticker for you anywhere, and I say, hey, consider this stock, you should do some what? Due diligence. You check out their community. Where can you check that out? StockTwits usually. StockTwits usually has a rabid community for every stock in the market. You can check out where else? FinTwit maybe, do a search on that stock. You see the regular people talking about their favorite stock. They're usually trapped in them. You can't trust them. But you can get an idea of these companies. You can check websites. Check websites like, what do I got here? Duolingo. Oh, not Duolingo. Seeking Alpha. Fuck you, San Diego. Stockanalysis.com. So I'm checking out sentiment. I'm looking for some bottoming. Checking out their fundamentals on stockanalysis.com. Hey, how are their guidance been? How their EPS? How is their cash on hand? What are they selling? Go to their website. What do these people make? Read their guidance, listen to their guidance, watch their guidance. So you've got your fundamentals down. You've got the shitter on price. You see some accumulation. You're at the beginning or still in a bull market, right? Then you should go to your financial advisor and say, hey, bro, I'm thinking about buying this stock over here, this shitco. See what they say. They start to meet those qualifications for you, or for me at least. and all of a sudden you start seeing positive news about these companies, it's normally because a hedge fund is accumulating them. They start getting good press, and they start to rise. And you're looking for something. You'll hear people call it this on FinTwit. They'll say, don't fight Momo. Do not fight momentum. It's horrible to fight momentum. It's always better to be with the momentum of a stock. So we're going to look at a couple of these this morning. So here I'm going to open up this in a new tab, and I'm going to open up this in a new tab. Now, I'll be honest with you, I don't like Seeking Alpha personally, but they do offer some free shit. You can look at look up this information elsewhere, of course. First place I'm going to post, we're going to look at this stock ticker right here. So we're going to do a fundamental analysis on this company. And just check it out. And we'll look at a sentiment check on this company. So we'll do stock twits. And I think if you do this, and the first sticker we're going to look at is called Burn, B-Y-R-N. B-Y-R-N. And it's a Burna. I don't even know if I'm pronouncing it right. Burna Technologies. Burns patented tech and expanding production make it attractive with untapped market potential with a forward earnings multiple of just 5.83. Low. Strong breakout. Word in the street is that CL is selling like hotcakes. I'm reading stock twits on this company right now. The chips just got approved for production and it went to 100%. Imagine when they report earnings on those chips. So you could make a post in here on stock twits and say, you know, what do you guys think about this company? And then you can look at some of their fundamentals. A growing leader in non-lethal launchers. A less lethal self-defense technology company. Develops, manufactures, sells less lethal personal security solutions in the U.S., South Africa, South America, Canada. Look at this. Woof, their revs just cranking. 30 million, 106 or 60 million, 90 million, now over 120 million. Yeah, their EPA is okay. They keep beating, though, on their earnings estimates. 20, 30%. This one's okay. I don't know if I'd own this forever. Less than lethal? Eh. They look good. So I don't know that I would be in this company forever. Probably want to go in and read some of their earnings. $167 employees. They're in Andover, Massachusetts. They were founded in 2005. When did they IPO? Let's look. Come on down, baby. Come on down. Come on down. Come on down. This is where the pain is right here. It's all pain for people. BYRN. $2,005. Looks like they got good spike ability. Spikes up here. 2021. Traded a high of $30. Just did another high up here of $34. This is the accumulation distribution, right? Just putting around down here. This took what, 2 years, 3 years? What is this, 2022? 2024. This is important, isn't it? Big shitco. So when you are going to look at these stocks, you know that this company can trade pretty low, right? If you were to make baskets of these companies, like you looked at one of these a day or every 2 days or once a week, what you can do is make baskets of them on your trading view. And you make alerts on them. This one in particular loves to trade off this white line right here, doesn't it? Comes up, comes down, comes up, comes down, comes up. Fairly easy over the life of this company. In particular, right now, this company back-tested its monthly trigger, trying to make a series of new highs, but I would say that it more than likely rolls, right? Maybe there's a small trade in here, but I would keep this in mind for future, right? Let's take a peek at this company right now. You've got a daily trigger crossing a weekly trigger. They're trying to fight to get up here again. I don't know that I like this stock here personally. I'd love to own it at $7, $8. Maybe it never comes back down here again. Maybe it's a pump and dump. I don't really care. All I know is whatever this is, maybe it closes a gap up here. Rolls back down over time. 1, 2, 3. So I don't know that I'd want to own this personally, but I will set an alert down here. Add an alert on trend line. Price crossing down. Once per minute. Create. So I now have an alert on this stock. It's a little past its prime for me. I think there's still money to be made in here. I think there's still more uppies to go. I can see a gap up here. Currently trading $26. Got a gap right here. It needs filled. Still in a bull market. Trading $26. That's 38% from a daily trigger. So I could even conceivably say to myself, hey, if this comes down here and trades within here, still in a bull run, some stops underneath it. 38% beats the S&P 500. Reasonable trade for right now. Now, let's say I do 100 of these in a month or in a year. Add an alert on horizontal line, price crossing down. Once per minute. I'm going to look for some doom. Maybe it's just market conditions, but if market conditions are improving, try to take that trade. Are we still in a bull market or not? Put some stops underneath it. Manage the trade. Potential for a 38% return. That's not bad. You're not trading options. You're beating the S&P 500 fairly easy. I wouldn't buy it here. But if they sell an ER or something, keep it on my list, right? Not bad. Pretty good. Let's look at it on a daily basis with its momentum. Is momentum in its favor? Looks like it. Looks like it's got a little bit left to go over here. I don't like its weekly, losing its weekly. I agree with this here. This here is telling you that there's a little bit left to go on monthly. But there's a trap here for buyers on a weekly basis. So maybe you get like one more pump up, and then we go into this down cycle. That makes sense. That looks about right. That means that there's likely some trapped buyers in here. That all kind of matches up. Likely see some more up. Some kind of a failure in here. So I've got my alert set down here. This is a good one to keep. Just keep it in the stable, right? All of a sudden you're a market maker. A little bit more room to run up here. Still looking for a failure to go down here. You don't care if it goes up here. Just care about this and this and this. That's it. You have some alerts set to try to get in the rest of this trade. And you're looking for anything down here. You might be like, I love this stock cap. My favorite stock in the world. I'm like, yeah, fuck you and your love for that stock. I'll own it at $10 all day long. Keep it in the stable. If none of this, if I don't get an alert here, if I miss the trade and it just goes up, oh well, I've got another 200 or 300 that might do what I want it to do for me to get in on it. If we fail and start running down here, right? Market conditions suck. We're now in a bear market. It's end of the year. Oh my God, everything's terrible. We hit. Maybe I'm not buying. I'm just watching. Start to make some series of new highs. And I'm now trying to get long for this payout over here in the next cycle. Next one we're going to look at here is XL. SPOO's selling right now. EXEL. Whew. This one's moving. Look at this bad boy. This one's been around forever. Looks like it was a darling back in 2001. Hasn't done a ton, has it? Starting to pump right now, isn't it? New high, $48. Exelixis. Some might have already played itself out. Revs look great. Rev growth, beautiful. Profit, good. Looking for a low over the next 12 months of $29. I agree with that. Somewhere down in here. It's got some nice lift off and momentum going to the upside. It's got a ton of stuff to close over here. Had a peak of $50. Check out trend on this company. Buy, buy, buy. Leaving behind some gaps down here. This was a $2 company. Whew. Big gap closed down here. This is where the initiation was right here. I'm going to snap a line down here. That gap right there, $20. Set an alert on it. Crossing down. Once per minute, create. There's also an idea that we could go higher in this stock. Let's check its velocity. See what happens here. See what happens on this stock on, yeah, this right here. We got a low right here on daily and weekly. This looks like it's ready to sell. This is a good sell one here. See, I almost at a peak here. Get rid of that. Look at this one right here. We're almost there. Let's look at that right there. You see that right there? Nice little roll. One more pump up. This one here, we're going to try to sell. This is what we're going to do on this one. Ready? I got that peak right there on monthly velocity. Still have a little bit more up to go on quarterly. We're going to make an alert on this monthly. Add an alert on horizontal line. Velocity crossing up. Once per minute. Create. Instead, I'm going to look to short this company. Leave this here for myself. So now I've got an alert to buy. Good enough for me. So if this thing cranks for a little bit more up here, start looking for a short opportunity to the downside. That was Burn and XL. You guys gonna pay me some money here today, right? My puts. big giant sucking sound of your calls today. Come on down there. Come on down there. Come on down there. Woo. Woo, baby. Here's where real support is over here. Real support's over there. Real support's over here. 580, baby. Oh, I don't think we're going down that deep, but I wonder what a call spread looks like at 580 to 612. Bet you that's juicy. Bet you that's a fat paycheck. Coming into the hourly trigger right now. On my risk on charts, I've got 0. Pub looks like a good short. CUB. Deliver roll coming up in HYG. 10-year bullish right now. 10-year trading 4.488. VIX looking bullish here. VIX 9-day. SPX rolling down. This is the chart from yesterday. Oh, yeah, baby. Almost there. We could just park this too. Park that in there. Maybe a quick. Oh, yeah, just like that. Have another update here on Nvidia. I keep looking at commercial real estate. So there's if you don't know this right now, I'll tell you that CMBS related to so if you're yes, I'm looking at real estate. So multi-family buildings are in distress around the United States right now. And also older manufacturing buildings are in distress, and mortgages assigned with those commercial mortgages. Everyone's the new darling right now is like new construction for manufacturing. And the Fed is unloading that shit off their books. So I think that if you keep an eye on those two types of properties, that there may be a capitulation in those properties over the coming year or two, maybe the next 2 years or so. Start dabbling in groups. What I would recommend is that you get on Facebook and you find a real estate investing group and you talk to those guys and say, hey, I'm interested in these two kinds of properties. Now, personally, I'm not interested in multifamily dwellings that are older. They're in distress, in my view, because living standards are being raised in communities. And they're like, oh, you got to remove all this lead. You got to remove the windows. You got to do this and that. There's just not enough profit there. But I like the idea of bringing manufacturing back to the United States and accumulating distressed older manufacturing buildings. Maybe you're not trying to own this building to lease to the best company. You can get a nice 10-year lease in a manufacturing company, get a big down deposit, and if they fail, they're out. You can do it again and again and again. So older manufacturing buildings I'm looking at right now. And you can actually you can actually look at the Fred on this and then talk in this group of investors about it. Be like, hey man, these are toxic mortgages. There could be an implosion in this sector. Is anybody else looking at this stuff? And maybe you meet a new friend or two and you start chatting about it. And you get yourself a group of investors together. Manufacturing buildings, older ones to be more exact, and in specific communities. That's what I'm looking at right now. Ruh-roh. Goldman coming out and saying U.S. pensions are modeled to sell 20 billion of U.S. equities for month end. 20 billion to sell ranks in the 89th percentile amongst all buy and sell estimates in absolute dollar value of the past 3 years, and in the 86th percentile going back to January 2000. I guess that's catching some eyes today. VA loans, no. You can't really. So after 2008, right? Well, I should say this. I have owned companies. My wife and I are both veterans. We have owned companies with veteran preference, and because my wife is a woman, I have had her own companies. Got the double whammy on that one. Woman veteran. But I haven't used so here's what happened. 2000, we've created a more resilient investor. The Senate changed a lot of rules for loaning money to people. Basically, simplify it. So what happened was private hard money came into the scene. And they have even harder rules. So there's hard money lenders, and they give you shitty points, but You do a couple deals with them, they'll give you good points. Normally, they want you to buy, renovate, and then flip. Within that, though, a lot of people become wealthy, and you can usually meet other people with wealth, and they're looking to, of course, invest. So you form a group of, like, we're on the internet. You can you can join wherever you live. You can join a real estate group free on Facebook, and they do meetups. You go have a glass of wine, meet other like-minded people, and you use straight cash. It's the easiest way to get anything done these days, believe it or not. The easiest. You have decent credit, you have some cash on hand, you can usually get money to do any real estate deal you want to get done these days. Fairly easy. You got a plan, you get it done. And that's right. That's right. VA loans are only for owner-occupied residential properties. But you can start a business and get loans, especially if you're a woman veteran. You get some preferential treatment and stuff. Any of you thinking about call spreads for mid-June right now, late June? SBA is a pain in the ass. I've been through that. I went to business school. Matter of fact, I had to do an SBA. To graduate. Like go through the process of applying for an SBA loan. They're a pain in the ass, man. They really are. Private equity. You want to start a business? You want to know the first business I started? How I did it? I had little money. I found a distressed. What I did was I started looking at the business I wanted to buy or open. I looked for a failing business, or looked for a failing business that was in a location that was good, but the wrong type of similar business was in. And I literally cold call. I just showed up. I would like look at these companies, and I would just show up and introduce myself. And I was like, the first business I ever owned, I said, I went into this company and I said, this looks great. I love what you do. And see that you're not that busy. Have you ever considered selling? And he didn't own the building either. He was leasing it. And he was in over his head. We chatted, talked for days on end. And I did I forget what it's called right now, but I basically bought the business with no money down. I assumed everything he owned. I assumed his debt. I kept him on as an employee, and his daughter. Him and his daughter were underwater, losing money. They had no job prospects. I hired them to work for me. I assumed the debt and all of the assets, and I turned the company into something new. I had money, but not a ton of money, just enough for operating. And I turned the company into something new, and new ownership, new everything, and assumed the lease. Didn't need an SBA loan, none of that stuff. Failing company. This guy just wanted out. He wanted to stop the hemorrhaging. I promised to employ him for, I think, 1 or 3 years. I paid him and his daughter to work for me. His daughter actually did the books for me. And he did a bunch of like back office stuff for me. That's true. That's what I did. It worked. No loans, no nothing. And I pumped that fucking company, pumped. Had a good idea. It was risky. Nobody wanted to touch. I tried to get loans for this startup, and I couldn't get. No one would touch me. I was a young guy. I was 26 years old. I was 26, 27 when I opened my first company. I was a very young man then. Very true. I don't think about that much. And that's what I did. Like debt sucks, man. Loans suck. Like they're good. I mean, they're like cheap money is good if you can pay it back. If you got operating, if you got like money coming in every day, every month, a proven business, like cart before the horse kind of thing, you're good to go. But you know how many businesses fail? It's like it's stupid. So the least amount of debt that you take on in a startup, the better off you are, in my view. Unless you're in the business of startups. A lot of people are in the business of startups, like to do the startup, they get the investors, they don't care if it fails, as long as the money is always flowing. If you're that kind of guy, sure. I was never that kind of guy. I always believed in everything I did. So, oh yeah, come on down, baby. Sell me your calls. Bring me your pain. Come on down. Come on down. You can do it. We're gonna suffer through this all day long. Then we're gonna drop right into the close. Hopefully. Yeah, I'm not anti the SBA way. I'm not necessarily anti that. I fucking hate debt, man. I fucking hate it. I'm in puts. I got puts. I think we burn into the week. I think SPY burns into Friday. Not burn, it just like fades. That's my thesis. Well, from here, I think we trade sideways. You want to know what I think happens the rest of the day? We trade sideways. We go sideways the rest of the day, and then like last minute we dump. And then we've got some volatility the next couple days, potential volatility. We've got 2 o'clock here coming up. It's 12 o'clock now. We've got FOMC minutes, but more importantly, we've got some GDP numbers. We've got some natural selling into month end. I think the Vanna Charm trade is over. Generally, I think retail's stuck in Nvidia, so they're not in indexes just yet. But I think we get some like natural selling in the market into month end. We also have the minutes today at 2. We've got GDP in the morning. It's a nice little trigger. Unrealized volatility into that event. And then we've got risk off on Friday. We've got PCE, personal income, personal spending. We also today have we've got something else I got to look at here. I forgot about it. I meant to bring it up to you guys. Yeah, we got a 5-year note auction for $70 billion at 1 p.m. We've got the volatility of Nvidia's reports after the bell too. My fear here is that even if it's a good report, that we won't see the knock-on effect in the indexes. That if there's a concentration of retailers in Nvidia, they're going to take their money and run. So I don't know if we see like the knock-on effect to the upside on SPY, maybe, or in Qs. Maybe it's possible. So we do in Thursday have PCE, and then Friday we've got. I think that's all we've got. Yeah, I think that's all we've got. Friday the PCE. So maybe we like unclench to the upside at like and we got Michigan consumer expectation at 10. And we know that some of the sentiments improving slightly, so that maybe that like that 10 a.m. on Friday, we get like that second, yeah, bro, everybody's stoked. We just buy calls on Friday for next week, bro. Some call spreads. I think we bottom out here. But I would be afraid of the end of the day today. So going back to these stock picks and stuff, just circling back briefly, if I post a stock ticker for you in the Discord, I want you to check its momentum, check its fundamentals, check its technicals, check its sentiment. I want you to go in more depth reading about these stocks. I want you to see if it's in a sell or buy. I want you to accumulate and make. I don't want you to chase this stuff. I want you to be like, this is what I would feel good owning this stock and for how long. Is this a shit code? Do they make something real? Do they make something fake? Are we in a bull market? What are market conditions? So on the stock side of things I was talking to you about earlier, I have a pinned message in the stock channel that lists all those same rules. If you ever want to look at it, if you're a member in the Discord, I literally wrote that stuff out for you. And start collecting stocks even if you don't own them. I want to own it here. I'm looking for it to do this. Momentum's not on my side right now. Momentum is on my side right now. We might be turning up here. Might have a little bit of uppies coming up here. We should like trade sideways and up in the middle of the day. We'll keep watching. It's 12 o'clock now. We know we've this morning in the Discord, I said we might green bar it up and then sell, which is what we did. We got that nice. We got a little bit early, about 9:30, 10 o'clock. Not quite 10:30. Now we're going to be looking for what? 12 o'clock, 12:30, 1 o'clock for a turnaround. It's now 12 p.m. See if the market will start to turn around. Also note that the 1 minute trigger is flattening a little bit. We're coming into the hourly trigger. Remember, too, we're in the summer trade. Wherever price is today won't be there in midsummer or in late June, early July. It's not a bad place to be thinking about a call spread, even if we get down another $5 or $10. We'll turn back up. Remember, this is side of a barn. We're side of the barn trading. You don't need to be perfect. You don't need to get the bottom tick. You don't need to be buying your calls or opening call spreads at, Friday at 12 p.m. You can do that and can become a better trader, but a lot of you out there don't need to be. A lot of you out there just need to be in the ballpark, in some fear, pulling back. If you can hit the side of a barn, if you can dodge a ball, if you can dodge a wrench, you can dodge a ball. See if we can get around here again. We'll check again right now. Ready? Wait a minute. Wait a minute. Hold on here. Let's use our rules, right? Let's go over here and look for a minute. You guys have access to SPY on the website. Let's have a look-see here what's going on. Have a nice little bloodbath all the way down, just torching. Theta burning. Woo! Woo! We didn't get a new high up here, right? So we got this one right here. We got a new high. Woohoo! Go back to this one right here. Now we're gonna check the next one. Got a little bit of improvement here. See that? Prior high, low on the half an hour. It's an hour, but it's still a half hour, right? We're watching the half an hour, right? Half hour, half hour, half hour, half hour. Got the euro close. Got the prior high. We just made a new high. We have some resistance here, right? So we'd like to see a turnaround here. We'd like to see, just watch. We would, oh, wait a minute. Nope. we'd like to see the market get higher than this prior high. And don't forget this one right here. We'd like to see a back test over here. Hold the 1 minute trigger, make a new high here. And we get this one right here. We get a lot of like, see that, a lot of volatility back here, right, on an intraday basis. But we want momentum on our side too, right? So if we get a little bit of momentum here, a little bit of momentum on our side, right about there. We would want to see what happened. New high would be nice, right? Actually, sum up, we're up here. Why are we looking for that? Well, we've got a turnaround, right? Get a little bit of this turning up. Get a little bit of that turning up. Now, I don't know if we're going up there, but that's what I want to watch for, right? Just watching the market here. I want to see, you know, maybe this here, maybe this here, wherever. I want to watch for a back test. And I want to see if this holds. This begins to hold. Start heading up. Execute a trade. Got some momentum on my side to go higher. Wham, wham, wham. That's a good trade right there. We also have what? 1, 2, 3, 4, 5. So we try to put together a rally, they say, right? I would really like to see it tick high right there. Let's watch this together. We'll also look at a 30-minute basis. We're on the hourly trigger. Hey, check this out too. Look at that, huh? Up, down, up, down, up. Maybe one more time before we start cranking, right? End of the day today. Check that out. Look at that. You got a trend going. Maybe one more uppy right here. Maybe we could snap another line up here. Right about there. Put together a little. This might not hold, but you know. Is that right there? It looks like we're working in something right here. We got that right there, that right there, that right there. Yeah, we're working. We got the hourly velo on our side right now. Check out velocity. Yeah, velocity is still good on an hourly basis. Still strong. Well, you're in business right here. All the way down here. Put together a little bit of a rally here, maybe. A little bit of a rally, maybe. Yep, there, maybe. 591, 592. Maybe a call spread. Put some time on it. Not bad, right? Maybe that's bottom right there. Maybe one more down into the close. More Nvidia information here. I think we get one more down moving to the bell today, boys. Nice, maybe an intraday rally here, but let's see what happens here. God damn it. Then he draws it out for me. Takes the triangle crayon, shows me where it's at. Yeah, Chase, you're getting an intraday pump, bro. You're going to be up here looking to sell, well, I would say it's two places here. Sell 599, 494, 591, 22. There's a little extra sell spot up here, too. Close your puts if you need to, bro. We can jump back in them again. $5,900 on SPX right now. Nice inflection point. 5,900. I still think we can easily trade like I think it's easy for us on what day is today? Thursday? No, today's Wednesday, right? Thursday, Friday. Like 80 maybe. Maybe like 80, 82, 85 into the weekend. Be nice to like take the pain trade into Friday. I don't know if we can get down there, but we can get that sell into Friday. It's like fade this whole move into Friday and here, let me maybe I can make this easier for you guys to look at. I mean, I don't know how this goes into Friday, but be really nice to like sorry, this is my Vixpiration stuff. OpEx, but it'd be really nice to like maybe capture some of that Nvidia, but then like fade this move. And then your real launch is like right here into June. that make any sense? Not that it matters. I mean, I think here is fine too. Buyers here, buyers here, buyers here. That'll make sense. But if we can get like that pension fund selling bullshit, like even if we capture like fade this, right? Get you a little Nvidia up high up here, right? Still up here. And like fade that pension bullshit, then we're off and running. You guys want to see that? Nice little channel down here. I'm being a little greedy here, but you don't need to be this greedy. I mean, let's be honest. And we could sell this shit right here and then suck it right back up. A little bit of volatility and pension funds selling down here. Wouldn't that be pretty? You know what the Bears are doing? They're like, the Bears are like, sell it down to Friday, get us underneath, get us some fucking Trump tweets, and we're down here into June and July. I'm just looking for some cheapo calls. Cheapo calls, baby. That's 560. I don't think we're going that deep. That's what these fucking Bears want. They want like 560. They want 564. Call it 565 is what they want. They're fucking savages. Oh, I can see 564. I can see 564 on June 2nd. Can you? I can see it. But if you buy call spreads here, it ain't going to matter. Anybody out there at all have 564, 565 on their waking up on June 2nd? Trading 589 right now. That would flush the whole market, force them all to buy again. Well, probably because they're in degen trades. Oh, I love it. We beat this one here. That's good. We want to see this part. We want to see one more pump here. Want to see this one hold and nail this one right here. It's the next trade right there. I didn't draw out every little back test. I just drew out you want to see that here to get long. I should have drawn it out. There should be one more pump here. We want to see this one right here. Just that one. Then this one right here, and then this one right here, and then that. Anybody else got 560 on their bingo, 565 on their bingo card for waking up on Monday morning? I'm going to go with no. I don't think we do it, but there's bears that want that, though, for Monday. You got owned and served. God, dude, what's going on with this? I think we already did this one. God damn. They got the bears out in Nvidia right now. Both retail and institutional flows in Nvidia have started to decline significantly, and historically, when both types of flows and sentiment roll over, when Nvidia prices experience a drop of 15 to 20%. Jesus Christ. Give me like 1 second, guys. I gotta go empty the diaper. Do-do-do-do. Do-do-do. No one sold NVDA. Diamond Hands NVDA here. Looks like all of retail is loaded on NVDA. NVDA doesn't give a fuck. Like all of retail's in it. 5,900 holding right now on SPX. What's going on out there? What y'all doing? What up, B Money? Let me take a walk around the market here and see what's going on. Oh, God, I would love to trade 580. It's not asking for 565. I would just like to see us trade that fucking... Walter Bloomberg says rate cut expectations for 2025 keep dropping. Let me just take a look at this really quick. If you ever want to like, look at rate cut expectations, forget where's 6-month yield? The yield will tell you. It says here the rates could go up, but we're near top on them. False. Yields will likely drop. We're likely getting a cut in June. How about this? I'll make a bet with you. June or July, we're going to get a rate cut. We're likely got a rejection coming up around 4.42 on 6-month yields. Sometime after June, or June or later, we are getting a rate cut. This false. You're going to get a rate cut this year, almost guaranteed. And you're likely going to get some bad news this summer. Seeing here. Did I tease the Bears last night? Oh yeah, I did. I did tease the Bears last night. I was like, we might sell down on a Friday close. Bears. That shit always gets like 1,000 likes. NVDA looking pumpy right now. NVDA looking pumpy. NVDA looking pumpy. It's got to get past 136.28, but if it can go up there and if it can get 136.30 or higher, the back test should be good. It has to break the intraday high, which is 136.30. If it can get that and back test successfully, it should go off and run it into the bell. It's not there yet. It's at 136.11 right now. Yeah, everything is waiting on it. Well, that's my big fear is that all of retail's in NVDA and then they disappear. I've seen this before with Nvidia. Nvidia will rip and then the market doesn't follow along. Everyone's like concentrated right now, it looks like. Trump's talking again too. Trump's out there blabbing. Bill has a way to go. We'll negotiate. Bill, I'm not happy about all aspects of it. Trump's being reasonable right now. He's being quite reasonable. The commentary I'm reading
as well adds, I believe the trade deficit will be lower next year.
Note that we do have a bill auction at 1 p.m. and that this bill auction is tied to the tariffs that we did accumulate. That we do have new tariffs on, believe it or not. But just note that we do have a bill auction today. We've got a 5-year note auction. The short-term bills matter. The 3 and 6 month matters. Now 5 years are mattering more.
And USCEA Chair Moran says trade deficits are unsustainable economically.
Just note, though, that these auctions typically are bear setups. 5-year note auction. We got FOMC minutes at 2 p.m. I am interested in seeing what the minutes are. I do think you're going to get a cut. We're gonna be for. I think you're well, like right now they're saying you're not getting cuts this year. I don't think that's true. I think they were naive, not thinking that we're gonna get price shocks and shortage shocks and tariff shocks mid-summer, June, July. And I think that at some point like where the conversation is from
with Ukraine's President Zelensky and Putin if necessary.
Where the conversation is right now on
Trump says, I'm working on Putin.
Or where the conversation is right now from the Fed speak from Jerome, it's going to change at the next meeting. So I'm looking to see if there's any minutes talk. Like it's a really slow process to get that Fed speak to change. And I realize it'll stay in line with we don't know and we don't know and we still don't know. We still have uncertainty with EU tariffs. Now they're paused 90 days or until June or July, first week of July, I think. There we go. Squeeze it up there, baby. Watch this one right here. You just beat this one right here. Congratulations. Good job. This is the one that you just hit right here, that one. Now you just want to see this next one up here. Give me one more pullback, maybe. Turn around, baby. Keep going. Oh, dude, they're rolling Nvidia right now. The SPY's going up. They do not want that new high on Nvidia. Yeah, if you get the new high in NVDA, you have to be at like, if you get 136.30 or higher, then it'll pull back and then it's going to squeeze balls.
Screw up a deal.
And you can see dealers selling into strength here. Selling into strength here in NVDA. This is all dealer action here.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
I'm looking at the 6 month and I'm like, I think the 6 month goes up more here into June, which means no rate cuts, but I think it rejects. I think the 6 month rejects at 4.50. And then the real rate cuts start being talked about. Yeah, you can see like spies going up and
Trump
Nvidia is
says
being
that
sold
Berlin has
into.
got to get its act together.
Who has to get their act together?
Also says that TikTok is different than Nippon Steel. We would need China approval on TikTok. Trump says, I think we can save TikTok.
The fact that we're even discussing that Nippon Steel and TikTok are not the same conversation is bizarre. I know. Boeing has to get their act together. That's true. There's some truth to that. Trump's out here commenting on all kinds of shit. What's BA doing over that commentary? Did it drop like 8%? Nope. Yeah, it dropped a little bit on that comment. Shitting on BA today. Well, BA wants to rip faces off too. BA looks good here. He just shit on it. What's he in puts or something? Like BA looks bullish.
Says China is never easy.
I always wonder if he's got his Robin Hood app up and he's like, you know what? Fuck BA. God, 65 would be baller. Close that fucking gap down there.
Warned Israel's PM Netanyahu against Iran action and told him that it is not appropriate.
Just like wipe out everybody. $65 would wipe out this whole fucking market.
Trump says, I want to go into Iran with
I
inspection.
don't think we're gonna do it, but if we traded 65 on SPY, like retailers would be smoted.
Trump says, I told Israel's PM Netanyahu that we're close to a solution. Iran wants to make a deal.
SPX trying to get up here. Just take a peek at a few things here in the background. Let's look at one dates and see what they're doing.
Trump says an Iran deal could happen over the next few weeks. So Iran deal could happen.
59.25,
says Trump.
Just a note here that we're trading 59.12 right now. High concentration on 59.25. So on an intraday basis, right here, it's almost returned to the scene of the crime. A lot of call holders here for a lot of call holders here for 591. Right up here. Where that white line is. A lot of call holders for this trade right here. Yeah, I'm serious. I used to try to trade BA. BA's been a thorn in your side. I used to try to trade BA. It fucking sucked. The only way that I ever learned how to trade BA was I used to hate trading it. I'd only wait for bad news. The only way I ever felt like I could trade BA, it's very news driven. So I'd always wait for like big bloodbaths. I don't want to say what those bloodbaths are. Norm, some of those bloodbaths are for bad things, right? Happen to people. Like always looking for like doom and gloom on that ticker. Yeah, it's on my do not trade list too. I've gotten eaten alive in BA. When it moves though, woof, when that shit moves, it's like Tesla. Like dollar calls turn into like $30 calls. But it's a hard trade. It's a good paper trade for learning how to trade options or timing markets with news. It's one of the best traders. Trying to turn around to the upside here. Here it is right there. Let's put the whole move in here, or the last leg of the move. Three trigger bull cluster, intraday bull cluster. Now note that we have this auction coming up at 1 p.m. So if we squeeze up here, just be a risk off as we go into this and try to send us right back down here.
The Fed bids for 5-year notes total $9.6 billion.
NBIS, sure. Let me look at it really quick. Think tighter. Well, automatically, I'll tell you at 3:30 today, we're going to have Vol Wiz on. Hold on. What I do like about these related companies is that they have low IV. Like where they juice NVDA, if you have like an adjacent stock and they're not juiced and NVDA runs, the other companies sometimes will delay, but they will ramp eventually. Let's say NVDA outperforms in moons. The IV is already juiced, right? And the option interest is already juiced. If you get some farther out calls in an adjacent stock, their IV is not juiced. They'll have a delayed reaction and begin to ramp late, and you'll catch that IV on the call side. So I always do like not so much the stock that everybody's looking at, but adjacent stocks. So we're looking at NBIS. Let's take a peek at it. Nebius Group operates as a technology company that engages in building full-stack infrastructure to service the global AI industry. The company's business includes Nebius, an AI-centric cloud platform built for intensive AI workloads. Nebius builds full-stack infrastructure for AI, including large-scale GPU clusters, cloud platform. And I really like that. Like, let's look at this together down here. I'm betting these guys are not juiced quite like Nvidia is right now, and they look pretty good in terms of, like, I like this here. You like seeing this here? Buyers, right? Nice little ramp. Same.
Now concluded his remarks at the White House event.
Same little, hey, can we buy down here? $21 is nice. Not only that, excuse me, I need water. I'm losing my voice already. Oh, nothing like pounding a quart of vodka in the morning. Whew. Yeah, you'll get more call buyers if Nvidia has a good report. I love this double bottom here. I love the low, the higher low. You don't want to get stuck though in like a triple top. That would be something like this: wham, 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 which is possible. So I would say to you, follow along with the leader. Leader's right here. I've actually looked at this stock in the past. I can tell. See this down here? This is where my buy is down here. I had this as a buy down here. That's $22, and we've hit it twice now. Once, twice. So I have looked at this stock in the past. We're gonna delete this, and I got an alert on this one here. Remove.
In 10 minutes' time now, at the top of the hour, the US is selling 5-year notes at $70 billion worth.
So I would.
Prior high yield was 3.995%, and the prior bid to cover was 2.41.
See this down here? See this down here? And this is what I wonder about with Nvidia too.
So treasuries have mostly unwound earlier losses as dip buyers step in.
Even if you do this,
The late
you want to be buying here.
session in the belly of the curve ahead of this $70 billion 5-year sale today in around 10 minutes' time. The event follows a solid 2-year note sale on Tuesday.
A lot of risk in there.
1 basis point through the when issued level. This week's auctions are expected to benefit from a healthy month-end extension for June.
And what do I like about this is
Morgan strategists see the auction.
if you buy 100 shares here or here or here, you're selling puts down here.
Smoothly, citing unattractive valuations. Also, the latest CFTC positioning data shows that speculators were net short 2.3 million 5-year note futures, a near record amount and a possible source of covering demand at the auction.
Now, let me show you something here. Like this didn't show a new high. Can't tell if that's a wick or not, but if you look closely here, you never beat this. See this right here? $54. You need to beat that. This is all positive here, but having not beaten this yet, I like the buy lower. I have to tell you, I like the buy lower. I do. If you wanted to see this stock take off, I would first want to see this move right here. Now, this can be moved over. That would actually be there. That would be there. Whew. And you would likely sell just before you get to 100 there. Then 1, 2, 3. Then you'd make a new shot for that $100. This would be a whole nother trade over here. But my one fear here is that you haven't broken this yet, and that this is a false. This is like a false wick. They call it. I think it's called a false wick, but I could be wrong. But I think this didn't. You didn't get the new high, so it's more valid that yeah, this is your down. 1, 2, 3. It's more valid right now that this is 1, 2, 3, and you're gonna start a new leg down. Believe it or not. So this is valid right here still. This is a correction for another leg lower. So right now, so you would want to first see that move, have that come down, and then you'd buy it. You'd want to see. This isn't ready in my viewpoint. You'd want to see this like somehow come up and hold this. You'd want to see this right here. To get long on this, I would want to first see the move higher. Invalidate that. This is an impulse move. And then you'd want to see the daily trigger come up and boom, off and running. It's very possible that this is a corrective move here. 1, 2, 3, and then we start a new leg down. That gets ugly, like to 0. But your low here was $14, so this looks good. Let's look at it on a daily basis. See, you're almost done here. This looks great on the weekly looks great. Your monthly looks great. Your daily looks a little. How about this? I bet you got one more. Get the high, series of lows. That's what I think you're doing. We got one more down here. Close that gap. Hang tight here. NBIS. Turn this auction back up. I don't know if you need to go risk off here. I just know that it's like even if we go up, it usually gives an opportunity for a quick flush. There's not a lot of news today, so they're going to use this as an excuse. And like the 3 and 6 month bills were important. Now the 5 years are becoming important.
Inflation picking up in Europe.
1 o'clock. We're almost there. Always better to go. There's always better trades if you're bullish here. Just like hands off. You got your high back here. That's good to see. You got a no.
When issued 5-year yield 4.075% ahead of the $70 billion auction. Again, that's 4.075% for the when issued 5-year yield.
You got your high up here. That's good.
So we're now shortly expecting the results from the 5-year note sale. I'll lead with the high rate.
Yeah, they're not worth trading, in my view. Like 7 out of 10 times, you're going to lose if you're a bull. No edge for you. And like any of these auctions, like just no edge. They're not worth it. It's like especially on an up day. On a down day, they can be good, but they're still not worth it. Don't bother. It's a setup for a bear. Let them have it. Even if we go higher, just let them have it. Matter of fact, the back trade would be better. Like catch us in the back end.
High rate 4.071%, 4.071% compared to the when issued yield of 4.075%, with a bid to cover of 2.39, 2.39. The US sells $70 billion, awards 23.12% of bids at high. Primary dealers take 9.24%, direct 12.39%, indirect 78.37%.
There.
So that's a stop through of 0.4 basis points on the 5-year note auction.
Get a little mini pump right now. Oh, there. Look at there's SPY, a little mini pump. SPY, a little mini pump right now, too. President Trump suggests that a deal with Iran can be finalized in the next few weeks, lending the idea of good news over early June, mid-June, late June. Sources say Iran may agree to pause nuclear enrichment work. The bullish setup is here for the June trade, early July trade. All good news everywhere now. How much you want to bet that nuclear deal falls apart like early July? Like who are the sources on the Iran deal? Someone long into June? Is it GS? It's not really nothing burger. You want to see price go up here. Lends itself for us trading 591. I want to see. Come on, a little bit more. A little bit more. Keep going up. Up. Higher. No, 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 no. Higher. Oh, there's one more tick. I missed one tick. Maybe one more quick pullback. Higher. Higher. There you go. Higher. Higher, 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 higher. Go higher. Go to your hole. Goddamn fake ass stock market. Higher. More green bars. More green bars. More. More. Show me that fake ass stock market. There you go. Right about there. More green bars. It's like magic. They keep on pumping. And keep on going. Matter of fact, we don't care if you fail right here. Right about there. A bit lower. About there. Keep on going. No, a little bit more. Be playing around. No, don't touch that yet. We're not ready. Do this, then that. Do this, then do that. Then do that. No. And we'll come into this over here. Now we're setting up after this for minutes. Yeah. And then we'll do this right here. There you go. Turn around. Back to your hole. Can't go here if you ain't going to go there. Unless I missed the tick. I don't think I did. There's a tick right there. Yeah, we should be good. Up there. Up there, up there, up there. No. Don't go down there. It's up there. Up there, then down here, then up there. Stick around. Just get up there. Get in your hole. Close the gap. It's like watching paint dry. Yeah, there's one tick back here. Does this like stupid tick right here? It's claiming it hit. Claiming it hit this one first. So it's like, oh, bro, we can totally go down there, then hit that tick next. It's a technicality. The small ass tick. Just close the goddamn gap. Close the goddamn gap. Close the fucking gap. Get up there. Get the fuck on up there, and then we'll come back down. We'll party over here in a minute. Go where I told you to go. Get up there and be done with it. Stop dicking around. Just be done with it. Stop dicking around. Just tag it. It's like the tiniest wick. Just go up there and hit it. Slap it, reverse. We'll get out of here. It'll be fun. It'll be awesome sauce.
ECB's Villeroy says more rate cuts.
There you go.
In the coming months. Excuse me.
Grow some balls.
Again, that's Villeroy saying more rate cuts are possible in the coming weeks.
There you go. A little bit, tiny bit, a little bit more. Good, you can do it. It's an inch, but it's an angry inch. Where's pennies? Freaking 47. You're trying to hit fuck 13 pennies.
Your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
There you go. There you go. Keep on going. Squeeze off like. Give me like 10 pennies. 10 more pennies. Yeah, you're 30, 50. Give me 10 pennies. Ugh. Like, I don't know, man. I don't know if I can give you 10 pennies, bro. If I give you the 10 pennies, man, then I got to go down here and go all the way up there. Anybody call spread right now? Call spread down lower was nice. Look at that nice little move down here. Talked about doing a call spread down here. Not bad. Working. It's working hard. They don't want to squeeze off a penny right now. All we're trying to do is get up here. I mean, this is all in service of being told no. But it's still higher. And there's a juicy, like, gap up here, too.
Surely expecting data for Federal Reserve repo operation.
Maybe we'll get the FOMC minutes will get us up here. There's the magic button right there, FOMC. Up here, tag this, get the new high, fade all this over here, and then whammo.
$36 counterparties take $173.641 billion at Federal Reserve repo operation.
Oh yeah, there you go. There you go. There you go. That's right. Get it up there. There you go. There you go. Good boy. You did it. I want to see one more tick. Like one more tick, right there. It's like right there. Just one more tick. One more little tiny tick. Little tiny tick. Teensy, teensy. Oh, this is what you're going to do to me? You couldn't squeeze off, what, one more fucking 2-3 pennies. Couldn't give us 3 pennies. You gave me 7, but not 3. I'm tired, boss. No, you're not. Get up there and give me those goddamn pennies. There you go. There you go. Just what? Nope. Nope. No, I want the tag. I want the touch. Give me the touch. Just give me. There you go. Keep up just a tiny bit more. You can rest in a minute. You can rest in a minute. Just go up there, do that little tick right there. You can come back down here, do whatever you want. Give me one for the stock market. Give me one for Jerome Powell. Give me one for Jamie Dimon. Give me one for retail traders. There you go. Diamonds are a retail trader's best friend. Yeah, bring them in. Start pushing just like that. There you go. There you go. There you go. Woo! This is the saying of me in the Army. Diamonds are a girl's best friend, Private. No, there's a bear out there. He's like, oh god, yeah, I'm just gonna fucking sell that thing down over there. Fuck all these bulls. No, that's lower. Keep on going. No, 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 no. I just literally just want fucking one more tick, and you can get down here and do that. There's like a guy. Hands like. I actually know a couple guys on FinTwit that work for the the butt. He calls himself a button pusher. He's like, I just sit there and ready to hit the sell button. Like I know an actual real dealer. I know it's all computers now, but they actually have real people there. And he's like, I just sit there just waiting to hit the sell button. Like right here, hit the button manually. Wham, wham, wham. It's a nice little trade in here. There's a nice little fucking trade right there. Possible it's lower over here too.
Up to date with the latest and be on the bleeding edge of news for non-farm.
Guys, right here.
Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
See it. Instigate the trade here. Take the money, fade a little bit of FOMC, jump back in. Should be right here if they're right here. You're going to expect them to be right there, but you never know. They could be fucking around down here still. And they did miss the new high in here. Just a note, they did miss the new high. I wanted to see the tick up. This is all the degenerates getting out before we even find out. So these are all degenerate. You guys don't know this, but around here we teach you not to look for the high tick, or you look for it, but you're not in the trade. This is day traders that don't care. And if that's the case, then we go all the way down and give the whole trade back. And we find out, we think they're here. Or they're right here. And so they'll give this whole trade up, and we'll see if they're here or not. If they are, they'll jump back in again. We'll give the entire trade back from instigation. Wham, 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 all the way down here. Remember, when I draw these things right here, we can fade, we can hit, or we can go above. And for us to go higher up here, we need to blast up here. And then this would hold. We would trade this, because that means they're still long right now. Now, what they'll do is they'll hunt this down all the way to the instigation. And the instigation is here. Now, this is the instigation, but they might step in here or here. They might move up even though they've sold to get long again. So the buyers are still here. We'll find out if they're still here, if we're going to go higher or not. Or right now, it looks like the buyers are still here. We'll see if they buy this. Yep, they're coming back to buy it right now. This is good action so far. But that would limit us to this right here. We're just looking for that high tick now. This is all dotted. So now you're kind of looking for, if the buyers are here, you'd be looking for the move here, right about there. Not here. You're looking for these buyers to step in, get here, and then get here. And then fade into this. And that is because you want these buyers to take this up. And even if they fade this, they'd probably be sitting right here. Now, they could go risk off all the way down to the initiation of this trade, or even lower. The initiation of the entire trade is they could go risk off. So right now you're just looking for them to take this here, and you need to get that new high. Like, that is critical. And what that does, it implies that whatever this is, they're not risk off. Now, if they hit this and they do go risk off, this is where you expect them to be, to go higher up in there. So far, I think they're still here. Minutes are normally a nothing burger. They're not normally like risk off or anything like that. There's not normally a bloodbath per se. On a 1 minute chart, it might look like a bloodbath, but it shouldn't be. We should go up into, we should trade right around here. 591.33. You don't want to be long there. You want to be getting out before we get there. in case we roll. You don't care about this stuff. If you do see a break above, though, and we consolidate, make a new high, then we can start talking about the gap higher. But we're not there yet. So, and truth be told, go look at this. Truth be told, here is 2:30, and here is 3 p.m. (3:30). Here's 4 p.m. Don't forget, we've got Vol Wiz coming on the show later on today. Scale out for a little bit. Just chill. I would like to see us, if it's me, I would like to see whatever this is here. Hold on. I would like to see us get up here and make that new high. I don't care if we fail this. There is a better trade down here, of course. So you get the volatility of FOMC. I don't really care what happens here, to be honest, but I would like to see that new high. Because what that shows is strengthened buyers for the trade to here, even if we're weak. Because I'd like to see that trade go all the way up here, and then I'd like to fade the close over here and get that other low. Sorry, low. And I'm thinking of this in terms of Nvidia, of course, right? So you got Doom from FOMC, squeeze it up. I don't care about any of that. And I'd like to see this new low down here in the close, and then maybe enter an Nvidia trade or a tech trade or something like that. And the other thing too is that gives room for dealers. Hold on. Gives room for, like, you know, what this does too is, like, gives room for dealers. Let's say we get Nvidia goes crazy and they're like, we just invented the new chat, or not chat, but new chip or something that they don't tell anybody. And you get, like, market participation after the bell. Like, this is all priced in now. If we roll under after the bell and you get reignition of Doom Bear, then that's a new trade for dealers. So does any of this make sense to any of you guys out there? You guys understanding this? Like, in this hit here, we should do this today. Some sellers trying to come in and capitalize on this early. And here's minutes over here, just so you know. Hopefully, you can get something like that. That'd be a juicy trade. It's almost 0.43. But I still want to see this high tick. We didn't get it, so I want to see that high tick. It helps with the. It shows if we have buyers or not. Right now, it's looking pretty weak. No high tick up here. Not looking good for up here, but I want to see it. I do, even if we go down there. Shows buyers are here. Well, I got to look at something for a minute here in the background. Hmm. My daughter is saying that I owe more money for college this fall. God damn. That shit never ends. And I don't even think that's fucking give me a second, guys. I'm paying for my daughter's college, and my let's put this over here for you. You guys want to watch that? Just this right now. There's a lot of, you see these sellers right here. They're trying to hit this right now to the downside. They're trying to. It's called pricing and unrealized volatility for it. So they're gonna do this early. We failed to get the new high. Day traders got out. We're going to trade this all the way down, likely. All the way down into 2 o'clock, right down here. Target 588.76. They're going to try to take the whole trade, all the way down. Not bad. Not bad at all. They're going to try to blood this whole thing right now. Even though they know this is called pricing and volatility in an event and not caring about what the actual event is. Unrealized volatility right here. Not realized volatility. They don't give a flying fuck what's being said. So watch out for this bigger trade to the downside here. And then whipsaw this thing right back up again. And they will close short as we come into the actual 2 p.m. My wife and daughter fucking send me bullshit. My fucking kids and wife. Ugh. Telling me lies. Here's the next one right here. Here's all your targets. Here's first target, second target, and last target will be right here. 588.88. See the whole trade? So just so you guys can see here, see this trade? This was the 1 o'clock trade right here, okay? For the auction, up. And it's important to be looking for what happens here. Do we tip our heads up or not? And day traders are out. They're like, I'm out. I don't care what happens above. Trade comes all the way back down to the instigation of the trade. So this is garbage here. You're not getting this part of the trade. They just got out. This comes all the way down here now. And now we're waiting for 2 p.m. which could flush all the way down to here and then up. As a matter of fact, we should redraw that because still have not hit the high on this. So you could literally flush this all the way down, right? Hit that high. And that's where it's at right there. Well, we'll give it to you if you're a day trader. You didn't give a flying fuck, did you? Down, up, down, up. We're assuming here, let's go over this trigger screen. We're assuming here that this buyer down here, that they're now right here. But if you take their stops, so this is where you're assuming they are. You trade down here, and then you take their stops, and then you run. Watch it happen. We'll watch it together. And you're assuming they're right here. That's the instigation of the entire trade. And watch they'll stop hunt. Come down here, you'll think it's going to reverse to the upside. You'll be like, woohoo, let's get long again, baby. Got long to the tick. Gonna get long right here, and then it goes, woof. Bing, bye-bye. You're out. And then we can run up. Watch it happen. We won't even look at anything else. We'll just look at this. Price action. Watch it happen. All these guys' stops are being taken right here. Anyone that joined in for this, all their stops are now gone. Come back up again. Come back down. Hunt these guys. Hunt these guys. Oh, look at Spoos. Just stop hunting. Nvidia holding up pretty well right now. That's what I would do if I was a dealer right here. Take all these guys out, and then take all these guys out down here, and then make you cry like a baby as a bull. I should have stayed in, boss, and doubled down for that move up there. And then, of course, it goes up here, right? Smashes you down again, goes up here. You're joining in right here. You're the guy that got your stops taken right here as soon as you're there. Back down again to the close. So bullish, bro. Break it out, bro. Meanwhile, you're being whipsawed all around here. This is why I don't fuck around in these things up here. You never fuck around. You're just watching. Did we get the high tick? And that would imply that we're going to go up. So you jump back in over here for the move higher over here. The moment that happened, out. Bye-bye. No, wait and see if we can sell this right here. Already took their stops. Their stops are gone. And try to take these last ones right here. That's a red one. We have FOMC minutes at 2 p.m. Remember that we need some realized vol in here to get this low. Maybe a nice possible dip buy if we can get this deep. Now, if buyers do show up here, when we go that way, we can take the dip over here and buy that one. My wife and kids, they fuck around with me. I'm like, it's not just one check. It's like, I like this morning, I went to my wife and I was like, my daughter is like I'll tell you guys some, we'll have a little personal conversation. So I told my daughter, I was like, look, I was like, you're graduating. She graduates here in the next couple weeks. I'm like, you should go out and take a trip. You know, you get out. I was like, when I was a kid, I graduated. I had a graduation party with friends, and then I took a trip with my best friends. From my best friend and I, we drove to Florida. We stopped at every beach along the way, and that's what we did. We took off and we did like a 24-hour trip. It was longer than 24 hours, but you get the gist, right? Like drive, hit a beach, drive, hit a beach, hit every major city you could. And then I remember we were in Florida. It was another 24 hours. I was like, God damn, this state's so big. And my uncle had a house on Anna Maria Island. So we went and sat on a beach and we felt like we had accomplished something. That was my personal experience. Now my daughter comes back and tells me, I'm not doing that. I'm going to spend the summer traveling. And I go, what? She goes, I'm spending the whole summer traveling, Daddy. I was like, where the fuck you getting that money? She's like, I got my own money, Daddy. I'm like, I don't believe this for a goddamn minute. You don't work a fucking job. So I know that's bullshit. I don't know if it's her like aunts and grandmothers and all the women are gonna fund this bullshit. But I usually get stuck with this shit. One way or another, I get stuck with it. Or they're like siphoning off cash or whatever they're doing. I don't know what they're doing. I don't trust them. I don't trust them. I don't trust these fucking women. And I was thinking, like, go take a week trip or something with your friends. And yeah, whenever you say this to a kid too, they're like, because I think I almost positive I was like, I'll fund like you taking a week trip with your friends or something. But like a kid, a teenager, they'll be like I bet my daughter went to my wife and said, well, Daddy said he would fund me to take a week. How much is that worth? My wife was probably like $1,000. Probably something like this. And my daughter was probably like, well, I'm going to call my family members, see what they're going to do for me.
The top of the hour.
I can just eat fucking grass and sand. And how far will $1,000 get me through the summer? So they live like paupers. And yet do their own thing, and Daddy's not telling them what to do. But then, invariably, something stupid shit happens, or they're stealing money from me. They need more money, and then I get caught in the hook. turns into something really expensive. And this dude, I'm gonna tell you something about, I don't know about all women. The women in my life, they don't tell me, they compartmentalize everything. Everything is compartmentalized. Only tell him as much as he needs to know. And every time we need something, it's a separate discussion and negotiation. I'm serious. If you tell him all of it right now, he's going to definitely say no. He's going to say, fuck no, you ain't doing that. Yes, you can lie to your daddy and all men in your life. It's okay if he gets mad a little bit, like 10 times, he'll suffer through it. You just can't send him over the edge. You know what happens when you send him over the edge? He freaks out. Right? They're normally bullish. They're a non-event typically. FMCs. We're just pricing in the volatility of the event. All right, so you have unrealized and realized volatility. Most sellers don't care what the news is. So they price it in to the downside before we get to the event, and only if the event is bad do they go in again short. So this is all normal. So I'm thinking about this shit the past few days, and they asked me for a check for college. So I go to my wife this morning, and I'm like, is everything paid for college? And she's like, oh, we print out some stuff for you. So I'm like looking through the paperwork as I'm sitting here with you guys, and I'm like, fuck is this fucking... I'm like, I have questions here. I'm like, I don't think all this is paid. I'm like writing stuff down, and I'm like, they're going to come for me with more money. That's what they're going to do. I want to write one check and be done with it. I don't want to think about it. This is the full year. So like, I don't want to pay for, I don't want any daddy, I need this, daddy, I need that, daddy, I need this, daddy, that, this. I just talked to my daughter. I was like, you need flights, book them now. I'm like, you don't be thinking you're booking like a flight home for Thanksgiving and Christmas like a week before. I'm like that. I don't know. Any of y'all have kids in college? Am I the only person here this is my first child in college, so I've never been through this. But I remember the hell I put my parents through. And I remember the hell that my wife put her dad through. I remember he cut her off. That's why she joined the army. He's like, you're done. You're out. You were starting the fall too, Hero? Oh, right on, right on. All right, so JT Fish Dog, I'll keep you updated. Congratulations, Portland J. Congratulations, brother. You made it. I'm just entering it. Tennessee, right on, right on. Oh yeah, dude. I just paid the bill. I just paid it like 2 weeks ago. I'm like fucked. Congratulations, ad man. Oh, Jason, you're going into it too. Yeah, Goliath, I'm with you. 100% Smash. I say that I'm dude, Smash, I'm with you on this. UMass. Going to UMass. Oh God. It is my home state. It's where I was born.
FMC meeting minutes.
And she could have went for free to the University of Michigan. Free. Number 2 public research institution in the United States of America. Daddy, you were right. 10 years later, Daddy, you were right. I didn't want to listen, Daddy. All right, so we're almost here for the minutes. Remember that this is unrealized, or this is realized volatility. Only if we get bad do we go down there. Only if we get bad verbiage. Minutes come out in just a few minutes. We have unrealized and realized volatility. Google search it. Unrealized hit and run trade right here. The only way we go down here is if we get some hawkish tone in the minutes. If not, we squeeze up, back down, and then we'll take the trade higher. And that one is right here. If we trade like this, if we go up here, take the trade up there. But no trade yet. No trade. Risk off here. Go up or down. Sit in your hands here. Unless you're a bear, then you're always short. You let your puts expire worthless like me. $1:57, 3 minutes till the release. Yeah, UMass Amherst is cool. It's a nice little town. I've been there. I've been to UMass. I used to chase girls out there when I was young and dumb. The dorms look like a project. Their dorms are disgusting. They're like, what, 30 stories tall or something? Put like 1,000 kids in them. You know, it was cool. I used to hang out. I went to a small Ivy League school or sub-Ivy League. My first time at UMass Amherst was before you had like DoorDash and stuff. But they had delivery everything. They had like delivery cookies and milk. They had delivery anything you wanted. And they had like a small like delivery service. Almost like if you know what vertical restaurants are. Now they sold everything. And you could order all kinds of cool shit and have it delivered to your dorm room all hours of the night. Yeah, the zoo. That's right. I know the zoo. I've been in the zoo. Was it Building 5? I think it was Building 5 was the girl. I dated a girl there. What a shithole.
1 minute going into the FMC meeting minutes.
Yeah, the ratio was always good, 100%. I think I was dating her when UMass won the just after UMass won the national championship, I think. Yeah, 100%, Wendy's worker. I think I went there. I started dating this girl when I think it was like maybe just a few years after they won the national championship for basketball. Let me find, when did UMass win the NCAA?
$10 seconds.
Yeah, it was it was right around there. It was right after high school. It was right after they won. They won 95-96.
It's Fed minutes say that they agreed that they were well positioned to wait for more clarity on outlook. Participants agreed that risks of higher inflation, higher unemployment had risen. Participants agreed that uncertainty about the outlook had increased and it was appropriate to take a cautious approach to monetary policy. Participants noted that they may face difficult trade-offs in inflation if inflation proved more persistent, while outlooks for growth and employment weakened. Almost all participants commented on the risk that inflation could prove more persistent than expected. Participants agreed that uncertainty about the outlook had increased and is appropriate to take a cautious approach to monetary policy. Participants agreed that risks of high inflation and higher employment had risen. Participants noted staff projections for 2025-2026 was weaker than their estimate at the March meeting, and participants saw uncertainty about the economic outlooks as unusually elevated. Some participants commented on changes in typical correlations across asset prices in the first half of April. These participants noted that a durable shift in such correlations or diminution of perceived safe haven status of US assets could have lasting implications for the economy.
Listen closely here, bulls.
The committee voted to renew dollar and foreign currency swap lines. Fed minutes say that staff cited tariff policies as implying a larger drag on activity than policies they had assumed in their prior forecast. So it's just the key highlights there then. Cautious approach appropriate amid uncertainty and well positioned to wait for clarity on outlook.
Probably the only person out there. I got to say something about Jay Powell here. I've liked and disliked Jay Powell over the years, and he's probably the only person on your side. He really is. Probably the only.
Macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Probably the only person on your side. He's coming into the end of his term. As a retail trader, he is the only person on your side. I'm telling you, he's it. He is the only person on your side in this market today, and I'm blown away by that. I'm blown away that he's honest with you as a market participant.
The Fed May meeting minutes on the Financial News feed for you to read through.
Only person. You got another one.
US stocks trim losses after Fed minutes.
You got a sneaky one in here. You really do. He's the only person that's on your side. It's been like this now for me for like past few months. He's probably the only person telling you the truth. Wolf Richter, he sounds a lot like Wolf. If you follow Wolf Richter and you read everything Wolf says, you then understand all of Jerome Powell's speak. It's probably the most trustworthy retail person on America's side right now. In truth, honestly, for the effects of the economy or the effects of policy on the potential effects of an economic or an economy change on you. If we permanently change the economy, probably the most truthful, missed it by a penny. It's probably the only trustworthy. If you're out there and you're watching the show right now, do yourself a solid. Start reading Wolf Richter. Read the comments. Read the discussion. Very smart people read that guy. And you'll come to understand Fed speak better. Not the little governors, the little presidents, but Jerome Powell's speech at any of these rate decisions. You'll start to understand what he's saying more clearly. It's probably the only person out there that really truly is concerned for your well-being as a investor in the market. And I'm actually shocked. I'll put that over there for you. So those minutes, there's nothing out of line. There's a few changes in verbiage. I'll see if I can get a comparison of the release on the minutes and what's changed in the verbiage. It doesn't look like there's been much change. There's a little bit of change. Not so much in uncertainty, but in it seems like they've changed a few words maybe. Let me see if I can read this again. Hold on here. He's probably the only person out. There's a couple of them. I would say Wolf is one of them. He's agnostic on policy, but he's honest about if we do this, then this can happen. I think that those risks are still legit, even though people are reporting that it's not. When you change our economy, if we change our economy, you could see stagnation in our market for years, two decades, seriously, or in the stock market in particular. Repricing of the stock market.
US Treasury 2-year trims its rise after the Fed minutes. Last up, 4.5 basis points at around 3.994%.
Let me look at this 6-month here. 6-month yield is dropping. This is hold on here. Just watch this 6-month yield in the background. I'm not seeing any movement here. He really is it. I'm impressed. It has to be that his term is coming to an end. He does not want to see his legacy destroyed. He wants to leave a legacy. He wants to be remembered by you. That he never lied. That he never lied to you. Almost all participants commented on the risk that inflation could prove more persistent than expected. Remember this word, persistent. This word persistent is important because of two reasons. You want to see if that changes or not. What he means by persistent is that you'll accept these tariffs because you're still well off. If you're not if the consumer deteriorates, it shouldn't become persistent any longer. It would be something where it would be transitory. Inflation, a one-time hit to inflation, but that's only if you fight back and say, fuck you, no, I'm not going to accept this. Find a better supplier. Basically, I'm not going to pay 10 times for this pen. You know what? I just won't buy the pen. So you better go buy yourself or find a new supplier for pens, bro. Sorry. Or another company come along and make this pen cheaper. Fed staff projection for 2025, 2026 was weaker than their estimate at the March meeting. We already knew that. We keep putting it off. We keep like pushing off this tariff bullshit. This is like controlled demolition in my view. So they're gonna let this like happen over time. They need it for negotiating. There's a lot of reasons to do controlled demolition. You don't want to just crater the economy and crater everybody and send us to war and all that kind of stuff. You need time to negotiate. Some participants commented on changes in typical correlations across asset prices in the first half of April. Participants noted that a durable shift in such correlations or a diminution of perceived safe haven status of U.S. assets could have lasting implications for the economy. 100% on this. Durable shift in such correlations or a diminution of perceived safe haven status. There is no safe haven status in U.S. assets. There isn't. Not yet, there isn't. Staff cited tariff policies as implying a larger drag on activity than policies they'd assumed in their prior forecast. This is when I tell you that there was an expectation of Trump 2.0, but not the aggressiveness in his first half of his presidency. We're getting like, we got an expectation of, or a thesis of, he'll do this in his first half, and then on his way out, when he doesn't have to worry about being reelected, he'll do the second half of his trade war. But he's front running it, or he has been front running it, and yeah, larger drag on activity than policies they'd assumed in their prior forecast. I'm with them on that. I think the whole market is with him on this. There we go. There we go. Get up there. Remember the box up here? Trying to get up here into 230. Remember, we have the danger and the downside into the close. Also, remember that on SPX, we've got a target to the upside of 59.25. 59.25 on SPX right here. Here, I'll highlight it for you. So you can see it. There is some resistance right now in a half hour. This would be a big, big move higher. If we can get above this right here, should get a nice squeeze out of this. There's a lot of downward pressure here. I still think it's unknown, though. There is a way to get through all of this. I can't say there isn't. The slower they take it, the less pain there is perceived. My fear is that we go into start of 26 and we enter recession that year, and the demolition continues over the course of years, 2, 3, 4, 5 years of demolition. You know how you get out of that too, right? War. Either proxy, cold, or a real war. Give me like 5 minutes. I'm gonna take a quick break. I gotta go potty. Note to you out there that we are going to switch today to a private stream at 3:30. NVDA does not report until 4:20. So from 3:30 to 4:30, we're going to have a private stream. We're going to turn this stream off and do a private stream at 3:30. I will give you an outlook into tomorrow. If you want like an intraday outlook into tomorrow, what the expectations should be. If you got the brief last night, nothing's changed from that brief at this point. Intraday kind of stuff. We could. I'll tell you this. We have some volatility coming tomorrow and Friday. We have some forced selling coming into Friday. We could be looking for a low on Monday to get long, but anything down in here is not going to matter.
So they will start a morning standing.
Give me a few minutes here. I gotta take a piss really quick. But just pounded that water. It's running through me. I'll be right back.
15 and 8:30 a.m. Eastern Time. We'll maintain the afternoon repo facility offerings as well. The Iraqi oil minister urges commitment to the agreements reached in the OPEC Plus meeting, affirming that unity of stance is crucial for stability of the oil markets, according to a statement.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
The market's just parking its ass. Okay. Should I get a whiskey out yet or no? I haven't had a whiskey in a few days. Is it too early to get a whiskey? Hold on a second here. All right. 229. Just a note here that it's too early for a whiskey. First off, so we're trying to like roll out more mentors in our Discord. We have a voice channel now. We have mentors spending time in there. We also have relationships with friends of our community. One of them is Vol Wiz. You may know him from Twitter. He has a newsletter that he puts out. He's got a great little community too. I shouldn't even say little. It's a great community on Substack. Big chat going on in there, and I stop in and see what he's doing sometimes. And he's posting in there all day long, with really good insights into the markets. Now, Volwiz, if you don't know him, find him on FinTwit at Volwiz. Really special guy, very intelligent, market professional. This guy's a pro. And he is also, he came from one of the best finance schools in the country. Extremely smart. This guy's more knowledge than I'll ever have. And I look up to him. He's a mentor of mine. Hold on, Air is that small yet? Yeah, okay. And what we're going to do today is we're going to turn the public stream off around 3:20 p.m. I'm going to give you an outlook for a day and stuff like that. And we're going to do a private stream. I'll post a link to that private stream inside of the Discord. It'll be a private stream on YouTube. You can comment on YouTube or in the Discord or make give questions. And we'll try to find the best ones, see if he can answer those. He'll be able to read the comments, of course.
WTI crude.
He's in our Discord.
At $61.84 a barrel.
Voice news disconnect.
What we're going to do is look for some trade ideas for the summer trade for some of you out there. We're also going to discuss the ER trade for Nvidia and maybe a post Nvidia trade. I know a lot of you guys like Nvidia. And try to these are one of those moments where I tried to do a dumbed down explanation of a calendar put spread and asked the members to go and watch videos and read up on this trade. And we're going to go more in depth on this trade and other trades on this private stream. The stream could go from 3:30 to 4:30 for the 420 NVDA earnings report, but it could go later as well if we have more questions or you want more information and more depth of knowledge. If you guys like Gamma, there's a few guys out there that I like. I like Gamma Labs. I like Vol Signals. I like Vol Wiz. I like Nope, it's Lily. I like there's a group of them out there. Chris Siddell, is his name Siddell? There's a few of them out there that I really appreciate. And then there's some volatility and Gamma bros that complicate things or try to give more sizzle than should be given. More sizzle, and I don't like that sizzle. It's always bugged the fuck out of me because a lot can happen. We had Vol Signals on the show one day, and he's hella intelligent, and he was on the show here explaining Gamma and how it's so dynamic it is and how it can change, and you don't hear that too often from Vol and Gamma peddlers out there. So, and Vol Wiz falls under that category of highly intelligent and not trying to sell sizzle. And so I appreciate that from guys like this. And I was just looking at, there was a service that was selling like a Gamma thing that was like $1,000 a month. I'm like, this thing's fucking pointless. Truthfully, I was like, okay, so whatever. Because Gamma, Delta, Greeks can change, and they're very fluid. So, at any rate, simplifying Gamma volatility for most traders, like to demystify it is important. Like, what is important, and when does it matter? When does it change? How can you quickly look for some insight that you can use in your actual investing and trading? So we're going to go into that today, spend some time doing that. We hope to do more of this in the future. And I got like a whole setup going right now, and I got a new fiber line coming in my house. So we're going to try to devote more time to our community and personalize some of the stuff so that we have time together, like truly to be educators and try to demystify some of this stuff and simplify some of this stuff for you. And if you have deeper questions that you want answered, that we can do that for you. So Vol Wiz is his name. He's been on the show many times in the past, and we're going to try to have him back on again this afternoon. It's 2:35 right now. I will say this to you guys. I'm going to try to keep this simple here, or for an outlook. the market's on this trade and into summertime. Whole market's on it. Relatively speaking, the whole market's on it. We're at the unofficial start of summer. The easiest trade is to take some kind of like upside exposure that you can protect to the upside. There's more complicated trades where you're capturing the upside move plus the volatility and potential or the danger of a roll early. Let's go look at something here. And you can kind of hit the side of a barn on this stuff to an extent, but let's look at something here. See if I can make this simple. Hold on here. Talk about this really quick. Let's bottom right here. Right here. So this is SPY, okay? Oops, sorry. Don't mind this chart so much. This is a chart about OPEX and expiration. Quarterly OPEX, kind of like a chart for. I also follow the JPM collar in a chart similar to this. Whoop. Oh shit! I just fucked it up. Look at me. I should be locking this stuff in here. Lock it up, bro. But what's more important is this. What's important about this chart, or why I'm using this chart, is because it's here. But you know, demystifying. You know, not knowing where we go from here. Do we fail and go lower? Do we break higher and then go lower? Right? Do we just go higher? Melt up? And how do you not get bogged down with fear in all of these outcomes? Is important. I know that buyers are fearful here. I know retail's fearful. I know they're like, I'm afraid of the roll down. I'm afraid I'm going to get caught here. You know, I don't have diamond hands or whatever. Or I'm really bullish and then you get rolled down. All kinds of like unknowns. I know how this goes for traders. We're on a low, too scared, right? We're up here where the roll is and you're just getting long. Sometimes it works out. Sometimes it rolls. As it rolls, it goes higher than it rolls. And I think this is a huge question for people heading into summer. You know, do we roll down here, go up here? Like, how do you get in and capture all this? And how do you capture the upside, spot up, vol up? How do you capture all this? And if we roll, capture like double vol, you know, like midsummer into September. How do you capture all this money here and all this money here? How do you capture the upside with volatility? And even if you close the trade, we continue higher, reset vol, like that. These are big questions that need to be as best as can be answered. And I realize that there's danger here. I get it. So we're going to try to answer that for you. Some of this stuff today, or demystify some of this stuff today for you. And how can you take this with confidence and manage the trade through into midsummer? You know, and even the back end of this, you could capture all of this and manage a trade through all of this. And I got to tell you, this trade is like, can be, depending on outcomes, be like a 10x, 20x trade. These are trades that can change your bank account forever. As a matter of fact, yesterday I want to highlight something for you. I'm going to read something to you. Yesterday, I think it was Rebecca. What's her name? Hold on, let me see this. What did she write? Yes, was this yesterday? Let me see this post here. She actually commented on this yesterday. Yeah, I'm going to post this. Rebecca Chong, U.S. exceptionalism ends by QQ put spreads. Now, we're not going to do this trade, but I'm going to post this in the Discord because it's similar. We're not going to do that trade, but she's got a similar take on this. The recent U.S. equity rally was led by short squeeze hedge funds and systematic 250 billion buy. On the contrary, retail investors and European real money accounts have been selling steadily. In fact, the recent short squeeze setup is quite similar to the June-August 2022, where SPX fell to a new low subsequently in August-October. Consistent with my recent recommendation, I like taking advantage of the current high spot from the technical rally to sell Qs. SEP 565, 100% call with another 5% from the year-to-date high. The fund September 495, 420, 96 has a put spread for $5.21 with a max net payout ratio of 13.4 times. There's other ways to express this trade, but basically it's saying that you can capture all of this and capture any of this into September. This whole trade. So that's the thesis here. And even if we're bullish on the upside or if we're not, we want to discuss this trade. And this is like a game changer. Like when we went into expiration, remember when I told you guys, listen closely here. When I talked to you guys on Vixpiration and I said go risk off here, had you bought SPX puts that day when I told you to go risk off into that close, or not even close, till 3:30 p.m. on the penny or on the minute, if you remember that day, I think $250 netted $25,000 or something stupid. Might have been $50,000. You're talking about leveraging money to make some serious fucking money. $2 grand, 10 grand. You're talking about 20 grand, make you a millionaire. So this next part of the stream is to be taken seriously. It's the kind of thing that can make you a lot of fucking money. Change your bank. So we're gonna look at this trade. Sometimes they don't fully pay out, but they pay a ton of money either way. And if we did even go up and roll over, there's a potential for multiple X winning on this trade. So we're going to switch over to this soon, just like that day, and just like the days leading up into it, into OPEX and then Vixpiration. We ramped up into that OPEX close, and then we went into Vixpiration, had the drop after, and then had a major drop on VIX day. And then you've got bullshitters out there not being able to assign why we're doing these things or why these things happen, these unclenches happen, and when they happen. Timing. And they say you can't time the stock market. You guys know we can. So, yeah, we can talk about a bunch of stuff, Super Gal. We can talk about we talk about anything surrounding this. I want you to keep your questions. Keep your questions to yourself in case we answer them, and then when we open up the street or we open up the chat for questions, if he or I have not answered those questions, then what we'll do is type them in and say, hey, I have this question. I'll try to take note of them all. Keep the chat clean, and in the Discord and on YouTube at that point when I say, hey, we're going to open some questions, just ask one question, and we'll scroll through them. Whenever we can answer, we will in the time that we have. Now, I might be drinking bourbon by 5:30 or 5:30 maybe. This thing extends. Don't trust me at some point, but for the first hour or two, we're going to try to answer any questions we possibly can. And maybe we can do some follow-up later, or someone in the Discord might be able to help out as well. So right now, hell yeah, Super Gal. I got you. So right now, really quick, let's go to the trigger. If you're looking, and let me say preface something else here. You can be a bull and a bear. You can be in a buyer and a seller. You can be in more than one trade. You can day trade up, day trade down. You can be in a call spread and a calendar put spread. You don't need to like have only one outlook or viewpoint. For most of you out there, most of you out there, the general consensus here is that we are going to be strong up into, let's call it June 20th, possibly into, let's call it first week of July. Okay. We know we have prior, we know that we have prior all-time high right here. Regardless if we close this gap and go up here, regardless if we run all the way up here. I looked at a trade with you on stream this morning, pays 100%. It's a no-brainer. You put the trade on here, we go down and then up. Should print. Close your laptop trade. If we bleed down here, and then ramp up, no-brainer. Blast up here, no-brainer. Simple. You can day trade underneath. You can do whatever you want. Just note that, you know, most of the market has an expectation. They've been telling you they're not going to get bullshit in here until right around here. You know, Trump volatility, whatever, headline risk, all that stuff. That's what they're telling you. As a baseline, it's not a bad trade. There's better trades, but if you're looking for an outlook, you don't need to be ticking this, or it runs away, or you're afraid, with just a simple call spread. Or calls way out here, and you just run. Even if it goes down, you're not going to lose the intrinsic value, and you eventually get some kind of print up here. Fairly simple. Whole market's looking for this. People that manipulate the market are looking for this. Besant, Trump, everybody. The worst thing you could do is get cut up with, like, you know, like close dated in the money calls, blast you down, you get annihilated. You know, they're going to try to fuck you the whole way here. The simplest thing for you to do is to just put on a spread, relax this summer, make a nice, easy trade. If you're in a call spread, we start to bloodbath down here. You can always cut off the bull side and run down the sold call side and still make money. There are easier trades with bull ratios. You know, there's like a bunch of different things you can do. Ratio spreads, you name it. If you're bearish here, you can do a bear ratio spread. And if we actually go up, you're not going to lose all your money. This is a simple part of the year. Easy, regardless of price outcome into this time period. It's always nice to have a money maker. So I'm going to leave you with that. One other thing I'm going to leave you with is a quick expectation into the close here today. It's simple. I want to take you to here. So I want to show you this right here, okay? The close here today, or even just in a Friday. If we get a good report here today, I would still like to see this upside move up here in this close. This is my expectation of the close today. I still think we can trade down into Friday. We get this decent, if we get a decent report today, and then still trade all this in time here. Remember, this is the 30th. This is June. You guys want to see this stuff? Can. We're doing like minute trades. As long as we're holding all this stuff in here, or even this stuff in here, the way is higher. Make it easy on yourself. So you can see it right here. Want to see it? Somewhere super rampant right in here. This could take into the 20th or even the July. It's either time or price. So this whole move could be delayed, right? Could be down here, and then we're up here. Do yourself a solid and just get a spread. It's so easy. Find something, which I always recommend the hourly trigger or the daily trigger as a jump point. Your hourly trigger is right here. Right? Nice little dip to go up. And I like this daily trigger too. I like both. I would add one on here for, let's say, July. And then if we go all the way down here, add another one for June. Add a second one to the upside. These are where the buyers are. We know where they are. They're here, here, and here. Whole market's on board this trade. Whole market's looking to go up. If there are 2 times this year that are the most bullish right now, and it's not the best one. Second time is mid-September. Truth be told, even though we're going to tell you some contrarian stuff today, the most supportive part of our market is right now. And the second most supportive, no matter what price is, second most supportive time this year is mid-September. So if you're looking for, like, hey, I'm bullish, or hey, even I'm bearish, this is not the time of the year to be, at this moment, to be that bearish. This is your best opportunity of the year. Even if it fails, you can put stops underneath that trade. The way is higher. Okay. That's what I got for you guys. You guys are all paired up right now? Oh, they're trying to doom you out right here? 2:54, 3 p.m. coming into sour or power. Oh, look at that. Dropping you right down into the hourly trigger. Doom, baby. Are we going to get the sell down into 3:30, hopefully? Hopefully sell this whole fucking thing into the close. I got a bunch of puts in the market here. I've had them on since yesterday. I got puts on from right. We got puts on from right here. Still have them on right now. Oh, God, yes. Hold on a second here. I got to check. Hang tight here, boys and girls. Need more down. A little bit more down. I need more down, baby. Give me like more. Then give me another hour of down until like the closing bell. Look at that. Dumped. Failed to get a new high. Failed to get the new high. Dumped. Right down to the hourly trigger. Oh, God, yes. Keep dumping. Oh, yeah. Failed to get a new high. Right here. Lots of downward pressure. Failed to get the new high right there. And then hammered. Need more down. Give me down to the bell. I want down all the way into close here. Send this shit down to the depths of hell. Yeah, it was 87. Give me all the way down there. Give me 85. Want more down. I might have had more money if I missed this. Why does this always happen when I'm fucking blabbing, not watching? It's like they intentionally don't want me to get paid here. I think I might have made a bunch of money there. God damn it. Okay. Let's go back to main screen here. God damn it. Give me the fucking more blood. Look at that beautiful trade down there. 587. That was another 1 hour done, taken out. Oh, I love it. You guys get along there? Look at that beautiful fucking blood. Go deeper, deeper. Death. Close that shit off. God, I hope I get a print today. I can't wait. Let's get rid of that. Make it, just do a new one. Make it smaller. I want more blood. Oh, God, yes. It's like rain hell on these fucking bulls. Please just go send it like right down here. Send it down there. Send it down to 87. God, just give it to me. I got puts on. I didn't close them out. I wasn't watching. I want like the closing. I want the closing sell. Been looking for it all day long. Like right into fucking 4 o'clock. I was hoping we'd squeeze up here and then roll down. Not hoping, but I was hoping it would tip up here and go down. See that red bar right there? I was giving bulls a little bit more. I want to go down. Even if we went up here, I was figuring we'd roll. Start fucking sending it down. It's a 1 minute chart, boys. I'm bearish on the close. I'm bearish on a Friday. I'm bearish on a Friday till like 10 or 12 in the afternoon. I want to see everybody get flush. I want to see all the flushing. I'm just a short-term bearish here. I think this market can drop like a I think this market can drop like a snap of a finger. Just like it just did. God, give me more. I didn't close my puts. I missed them. We were already up here. I would have fucking closed them down here, though. And that candle, that wick, I would have closed the fuck out of those puts down there. Bring me more doom into the close here. Like, everybody's long here, so I want to flush them all out. All in single stock or single options. Fucking degenerates. 100%. My own. Too many. It's boats rocked one side. Everybody's on one side of the trade. We got a bunch of selling coming in on Friday and stuff too. We have like we got pension selling coming in on Friday, or that needs done between now and Friday close. So, or Friday at some point, maybe Monday open. Like 19 or 20 billion. I'm bullish. Oh, you got your summer trade? Good job, Parlay for Days. You got your fill? Yeah, looked like pension selling, didn't it? Probably somebody getting long for Nvidia. They did it early. I wish this happened at 4, like 3:30. We'll see if we can get more of this. Looks like they did it early today. That's gotta suck. Yeah, it does. I think they might have done it early. 3:02 p.m. What did Nvidia do? Oh God, where's Nvidia? They're still hanging out. Fucking diamond-handed bulls. God, I wish I caught that fucking sell down there. No, I'm mad. Hulk angry now. I don't know if I'm going to get that bloodbath now. I think that was it. That might have been it. So it looks like some traders got their spreads on for summer. Congratulations. I feel like we're one tweet away from like mayhem. Was there a tweet in there? Russian Foreign Minister Lavrov informs Secretary of State Rubio by phone of the preparation of concrete proposals to resolve Ukraine conflict, maybe? I don't know. Let me look. This is going to piss me off if I lose this trade. Because of fucking blabbing on show. This happens to me all the time. AOC leads for nominations. Called iOS 26. Fed will well position to wait for clarity on Outlook minutes, say. That might have been my chance to get out. See if we can get this selling here. Okay, so anyways, we'll get rid of this. So you get the gist here, right? Way is higher into June 20th. Potentially longer into July. Whole market's on this trade unless something really bad happens. It's gonna take it would take like, even if we traded 565, as long as we came back up, the market's going to stay long that fucking trade. Most hated rally of ever going on in the market right now for that upside move, that bull trade into the summertime or into the sideways summer doldrums. God, I'm so mad right now. I'm looking at my accounts. I'm like, what the Fuck. God damn. God damn it. Wasn't that bad. Watch out here. It's wanting to squeeze. They're going to burn my puts there. I'm watching them smoke them right now. Smoke them, smoke them, smoke them. Stays the same. Nothing's changed. Right there. And nothing's changed over here. Slide all those over. Type, move all that over. All that's still there. God damn it. All that still remains the same. Watch them take them out now. This one's now gone. Now we're taking one more tick. Need one more tick. One more tick. One more tick. One more tick. Let's go. One more tick. Do it. That's this move right here. Whoop. Nope. Not quite. That one's gone. That one's gone. That one's gone. Now we should go up and trade this red bar right here. We're going to go straight up. All up there. Should look like we already did it. Do it right there. Took that one out. That one's now gone. Right there. Note that 59.18.87 is hit, but not 59.25. 59.25 is still out there. 59.20 is the careful here. They could keep us locked into this. Looks like the people have closed 59.25. Right there. $59.20 or $59.20 in SPX. Red. Right here. That's the pin. $59.25 is now no longer significant. Only $59.20. which I think is right here. I've had to relate it to SPY. 5920 is the pin. I believe on SPY that's right here. This is 25, I think. I believe that's it right there. This mark right here. All right, give me a few minutes. It's 3:11. In the next 10 minutes, I gotta set up this stream, and I gotta set up a Google Meet. Give me just one moment here. Oh God, yes. Go down to the depths of hell. Oh, please go down. Go down, dude. Like, go down here. Like, go down there. Down, down, down. Please go down. Down to the depths of hell. Through all these bulls. Come on here. There's the Google Meet. Turn that off. Turn that off. And what's the last one I need? Oh, I need Nvidia, right? Earnings expectations on Nvidia. Nvidia. All right, what do we got here? Nvidia Corporation earnings. I've got some prior Oh, wait a minute. That's not right. That's wrong. Hold on here. Is that wrong? Wait a minute. I gotta delete that post. That's wrong. Nope. I gotta delete that post. Hold on 1 second here, guys. Delete that. Post the wrong chart. Wrong chart. Delete. Delete that. Nope. That's how do I delete this? Delete, delete, delete message, delete. Wrong one. That's wrong. I don't know why that's wrong. Oh, my hand. That's not the one that I want to show either. I want to show the. It's the wrong one. Holy shit. Trump orders U.S. chip designers to stop selling to China. Trump administration has told U.S. companies that offer software used to design semiconductors to stop selling their services to Chinese groups. Dude, right on Nvidia earnings. Damn. Oh, man. Right on Nvidia earnings. Trump orders U.S. chip designers to stop selling to China. Right on Nvidia's earnings. It's like so gross. Hold on here. They just cratered NBIS. NBIS just got cratered. I'm in puts here. I don't know what you guys doing. NBIS. Cratering. Thought we just did these guys. Yeah, we did. Oh no, NBIS. I thought we just did NBIS. Get them going down. I want to buy them at $20, $25. NBS getting hammered right now. All right, 324. I'm going to end the stream. I'm going to do the private stream